We're back to talk about Meta's new prediction market. Oh, first, actually, we have this little mini banger from Jacques Thebes on X.com.
Change diaper.
It's a less strong short form, and it's like a bunch of like fake AI benchmarks. Change diaper, bench plan, invasion bench. It's a reference to this quote from sci-fi writer Robert Heinlein. A human being should be able to change a diaper, plan an invasion, butcher a hog, con a ship, design a building, write a sonnet, balance accounts, build a wall, set a bone, comfort the dying, take orders, give orders, cooperate, act alone, solve equations, analyze a new problem, pitch manure, program a computer, cook a tasty meal, fight efficiently, and die gallantly. Specialization is for insects.
Really, specialization is for insects.
Really beautiful quote. You know, this is kind of what it means to be human. And you know, the AIs can do some of these things. They can balance accounts, write a sonnet, and program a computer, but they can't yet cook a tasty meal or change a diaper or you know, die gallantly. Yet.
Until the humanoid robots.
Really good. Fun fact about Robert Heinlein also, he's like one of the Silicon Valley people's like favorite sci-fi writer. And he wrote this book called Stranger in a Strange Land, which is where the word grok comes from. G-R-O-Q. He also wrote The Moon is a Harsh Mistress and Starship Troopers. Starship Troopers was actually like one of the first movies that, or one of the first books that pioneered the whole genre that became stuff like Star Wars, like War in Space.
Wow, when was this written?
Starship Troopers was in 1959. The first Star Wars movie was 1977.
Now, I'm excited. I feel like sci-fi and sci-fi fictional writers are all making a huge comeback.
Yeah.
You have these like famous founders and engineers who are starting to become authors and write stories. Yeah.
Oh, The Moon is a Harsh Mystery. Wow. So that is what popularized the term, there's no such thing as a free lunch.
Wow.
So Heinlein did a lot. And he also did this banger of a quote. Great stuff.
Is grok, like grok from this?
Yes. So conning a ship is, commanding a ship, basically. I didn't know that. Anyway, Meta is working on a new prediction markets app, which is internally called Arena, will probably be called something else externally, by Mike Isaac. We know this guy. We used his reporting so much during the Elon Sam Altman trial. That was great stuff. So Zuckerberg is creating a smartphone app similar to Polymarket and Kalshi. Oh, okay. Users would not wager money.
Yeah, it's with points, not actual money, which I don't
This
get
already
how.
exists. Do you know what it is?
It's like polls.
It's manifold. This is literally just manifold markets.
Oh, wow. You have some great points. How do the markets work on here if you don't have actual money
It's just fake money.
But then there's not as much incentive, right, to actually get it.
Well, you'd think,
right.
but the research shows that like play money versus real money prediction markets don't have that different odds, surprisingly.
Yeah. Fascinating.
Like the information advantage of these is like just as significant. And even with like, you know, small little markets where only a few people are trading, you have like a lot of stuff going on.
Wait, really? So the research shows that point markets versus actual money is pretty much the same when it comes to fairly similar?
Mm-hmm.
That's huge because then you can have small markets without as much risk.
Exactly.
Yeah.
You know, people do stuff that is stupid with real money too all the time.
Yeah.
So yeah, this is literally manifold markets. Meta is making their own version of manifold markets. We can see here like, will Fable 5 be re-enabled for Americans by June 30th? So a week from today?
Odds? No, 20%.
Not likely.
Oh, that's rough.
Not likely.
That's so rough.
What a bummer.
We're not getting that back anytime soon. Okay, so you have quite a lot of money or fake points on manifold markets. Are you actively using this often?
Not really. It is it's insider trading. So if you look at my like record, my all-time record on manifold, it was basically two discrete events. One was I think I did this was during Manifest 2024.
Yeah.
I like insider traded a bunch. And then over here was the presidential election, which I bet a lot on and did quite well.
Wow.
And since then, like I actually peaked out at 61, and now I'm at 57. So I've net lost since then, but I haven't been trading much.
Does it not count as insider trading because you're using points?
Yeah.
So
also, insider trading is part of the beauty of prediction markets. Like the point of the prediction market is to like aggregate information for the public. So prediction or insider trading is actually good.
I feel like it depends on the actual market itself.
Unless it's like something in which people aren't supposed to have information, like troop movements for the military. In that case, insider trading is bad. But assuming that you want people to know accurate odds,
and you're using existing information that exists outside. Like, what was it? Like pizza orders for what's happening in a certain area to detect when, like, people are making late night policy decisions.
Yeah.
I guess that's all public information. Know who's gonna get so good at trading and being able to predict this information? Agents, right? You have all the information. Fable 5. Put Fable 5 in a prediction market.
You'd think, but they are like not really that good. They can aggregate lots of information. I think like forecasting accurately is something that takes a long time. It's like a very long horizon task, and it requires like a very high degree of rationality about the world that I'm not sure the models have.
So they're not benchmarked for it.
There's forecasting benchmarks. There's like a super forecasting benchmarks or AI.
Let's see.
Yeah, so this is like forecast bench. So this is part of the Good Judgment Project, which is Philip Tetlock's research project at Penn about super forecasters. And there's a public leaderboard. And the super forecasters are still better than any of the models.
And Gemini's that Grok 4.2.
Oh, these are actually kind of old.
Yeah, these are old benchmarks.
Yeah, wow. So, okay, I guess it hasn't been eval.
I do want to see Fable 5 eval, to see where that lays in its actual forecasting. I mean, there's a huge incentive to get it right. Like right now, most of, even like the rise of agents, when it was doing like on-chain agents and which ones are doing things on the blockchain, most of them are for trading. And so you're very incentivized as a builder to try to figure out something that can predict accurately because that's how you have your hedge. But yeah, I mean, it's incredibly difficult to do. But if you're using different sources of information and different ways to make patterns to assess something, like the pizza is an example, I'm sure
probably
with
all
of
the
this
alpha
data
is
you can
gone
get pretty
from that
good.
now.
Yeah.
And it also sounds like something that the government would not allow to happen. Like if there were actual alpha in the Pentagon pizza activity, then they would ask Google Maps to change the pizza activity.
No longer a public API to see who's
So
delivering and when.
I think this is actually good. I like prediction markets. A lot of people say, oh, well, it's gambling and it's terrible. And, that's a whole separate issue, but they can't say that for this because it's not real money.
It's points. Timothy Chalamet was on an ad for Kalshi, and everyone freaked out. People were pissed.
I saw that. Who's people? Who's everyone?
Comments on X, Anon accounts, the PFPs. I don't know exactly who I was referring to, but
people just like hate new technology that they don't.
Yeah, there's
understand.
a disdain for prediction markets. That's like encouraging gambling. I do think the points piece is really interesting because there is something around the information, more democratized information. Can we get better forecasting, better predictions? But also the other end of it of
getting
over financializing or people who genuinely do have addictions to gambling.
Sure, yeah. I mean, I think like sports gambling on these things is probably bad, but that's only because the outcome of a sports game is not like an incredibly useful thing. But there are like economically valuable prediction markets. Like for example, when will Fable come back?
Yeah.
Did Kalshi did Timothy Chalamet jump? Did he get jumped?
Because of this Kalshi ad?
Yeah, this is what people are saying, I guess.
Oh, did that actually happen?
Yeah, maybe. Hope not.
Oh my God. No, just the Kalshi founder posted something about the Timothy ad.
There it is.
Or like.
Kalshi.
Yeah, try saying that with your mouth open.
What?
Yeah, it's like the ad makes no sense.
Oh, weird. That's all right. Oh, he's playing the piano at the music store.
It's not too bad.
I don't even get it.
Yeah, and just shots of him. Well, clearly it did well. I mean, so many people.
6-7 million views.
Yeah, so I guess it got its.
Why did you do this, man? I thought you wanted to be. I fucking hate
I
this
know.
account. This account sucks.
The tears. Yeah, so it has a lot of
Disgusting
controversy.
betting
People feel very, very frustrated.
The ad sucks too. What the fuck is Kalshi based on this ad? I don't understand the ad.
The ad's quite confusing.
But
that is super interesting though, the fact that point markets that don't have any actual money still have the same odds or still are pretty effective markets.
Yeah.
That is fascinating because if that's fully the case, you know, how can we start doing that to get more accurate forecasting at scale, especially for things like, will there be a natural disaster in my area?
Well, the problem with that is if you do have markets on will there be a natural disaster.
You create another market. You create like a arson.
Then all the stupid people are like, oh, why are you betting on misfortune and disaster?
Yeah.
When in reality, like you bet on misfortune and disaster all the time when you buy insurance. Like that is betting on disaster.
The other thing I find interesting is what if you could create a market for preventing climate disasters now? In a way. So it's like you have, maybe it's like a structured market, so you can only bet on it if you're like a government or something like that. And it's literally like, okay, well, the total cost, there's going to wildfire in Southern California. Will the cost of damages exceed or under exceed $10 billion?
I think they have those, right?
And so if you can do something to prevent the cost of damages, to be like making sure that there's fire prevention or all of that, yeah.
Yeah, will any Category 5 hurricane make landfall in the U.S. before 2027? This is like an economically useful market, of course, because it can help people and businesses prepare if this does happen.
What's going to happen?
And like, you know, sometimes people have like real alpha over a weather forecast. If they find some piece of information that was like not accessible before.
You know what? Weather forecasting is something that can really benefit from decentralization. Like people can have their own weather forecasting all around and get way better accurate data. And so there's potential if you wanted to start your own like small business, you just get really good at weather forecasting. You work with like a bunch of different people all around the world. And now you have a hedge over weather that others don't. And you can actually use that to make money on these prediction markets of what the weather will be like. And overall, we all get better weather data because the weather prediction is so bad. You'd think with all this innovation that we'd know if it's going to rain tomorrow or not.
It's only all right for like a week in advance.
Barely. Like I can't even predict, like as in New York for the Knicks game. And I'm like, do I bring an umbrella or do I not bring an umbrella? Will I get soaked? There's just like a rainstorm, like a whole thunderstorm that can happen in minutes and no weather app will tell you.
Oh yeah, I do have a friend who works on resolution criteria at Polymarket. So like what this entails is sometimes markets have disputed resolutions and he has to make that decision, which often will make or lose people millions of dollars. And so he says that he like gets death threats.
That is a scary job.
That is kind of a scary job.
Yeah, I'm always curious about the markets that don't have a clear, or it's like an arbitrary end, settlement.
Most do. I think they all have to, because it's like it's something that you trade on with real money, and so you have to like.
Yeah. The other arguments, like now, are you creating extra perverse incentives to manipulate the market? So something like sports, where sports betting. It's like sports, like, oh, you can't actually manipulate those markets, or it's very, up to odds. But now if there's so much of like a certain point, like maybe I'm just not going to make that extra free throw because I'll get a good paycheck. And that's another concern a lot of people have.
Athlete sports betting is like super illegal and has always been.
Yeah.
Like if you bet on yourself in any professional sports league, like you will get seriously punished for that.
Yeah.
And this has been the case for like many decades. Sports betting is not new. This is interesting. Meta released a crowdsourced prediction market app in 2020 called Forecast.
Wow.
Which is basically, no real money either. And it was sort of like Metaculous.
I'm curious why that didn't.
Just aggregating forecasts.
They have like polls. I think I remember seeing this when it first happened, but why did it not take off, and why?
It was just too early, I think. Prediction markets weren't big then. Since then, prediction markets have exploded into a cultural phenomenon with 130 billion in online trades on Kalshi and Polymarket.
Oh my God.
Oh yeah. A lot of other companies, FanDuel, DraftKings, Gemini, Trump Media and Technology Group, are doing prediction markets.
Fascinating.
Subway ad for Polymarket or Kalshi in 2024.
Oh my God.
They create new opportunities for people to use inside information to make money. That's kind of the point. This is bad. Betting on
when you have an actual insider information that's not based off of public information.
Meta insiders have cautioned that Arena remains in development and may not be released. Okay. Going to release this, but now it just says, oh, they're doing this internally, and it might not be released.
Oh, and it may not be released. I wonder what the reason for not being released. I wonder how much is due to public sentiment. There is so much disdain for prediction markets, and how much is just legal figuring out what they can actually do. But the points piece is easy. Like is more interesting because it's like manifold. You're not actually dealing with money, so it's not. The markets are still effective, which is super fascinating. Yeah. It's interesting. I mean, I work in crypto, and I think there's so much information and democratization that can be done when you have democratization of markets and more people can participate. But, there's also the other side of the over-financialization of everything and what that can turn into. And it's a really, really interesting debate. I know that pulls up a lot of emotions, and I don't want to gloss over that. But there is, it's super interesting when you think about like over-financialization of every single market. If everything is a prediction market, what is that world? And then
I just don't think it's that interesting of a debate. Like, there are things that you might not want to be prediction markets because they have sort of the downsides of gambling without the upsides of getting more accurate, more precisely calibrated forecasts, which is like sports betting. The outcome of like a sports game is not that consequential to the world. It gets resolved in a very short period of time when the game is over, and the types of people who trade on it are more likely to be like gambling addict types.
Yeah.
But like, I don't see an issue with like turning anything else into a prediction market. Like what Manifold does, like you'll see a lot of totally random things. Manifold actually had this platform called Manifold Love, which is like prediction markets for dating. Like if
are
you
these
know,
two people gonna?
If you know a couple, it's like, are these two people going to get together? How long will they stay together? I think this kind of stuff is actually useful. Like the problem is, for any given couple, there won't be enough people who know them well enough to make accurately calibrated bets.
Or it's like you're having a fight. You're like, but I can't. We can't. The predictions are too good on this.
No, the opposite. Like you have a fight, and then you're like, oh, this might be cooked, and then you bet a little bit on no for your relationship.
The other pieces I find interesting are how you can create new markets to incentivize more long-term thinking. Because right now, especially, you're thinking about like short term, like revenue, what will lead growth, but you can actually now create new markets for climate or you have like an AI safety, like to just like prevent things from going completely bust.
This was Robin Hanson's original idea with decision markets.
Yeah.
Which was companies would make decisions based on internal prediction markets. This has been sort of tried at like Google and Meta, but not like really.
Yeah. Even at Ethereum Foundation, we use prediction markets in a way to get even more accurate about where grants should get allocated. So you do prediction markets on, okay, if this public good open source infrastructure gets funded, is that actually going to add impact? And you get a lot of people to say like where they think it's going to go and like what's the impact. And you can make way more democratized decisions on where money should get allocated because people are participating by betting in a prediction market on what's valuable and what's not.
Generally, weighted polls, I think, are really useful. So the strength of your belief in something is just as important to aggregating a forecast as just the belief itself. And prediction markets are like a useful mechanism for doing this.
Yeah. But I learned a new thing that these points markets are just as effective. Or can you find that? That to me is super, super interesting because I wonder if that mitigates a lot of the concerns where you can continue to use. I am such a fan of democratized decision making. How can you get better decisions getting everyone's collective input? And technology makes that more possible, and things like markets and information markets also make that more possible.
This is a better way of doing it than just straight democracy. Like because people can bet on the strength of their belief as well.
It's like you have like an economic policy, like tariffs or no tariffs. Okay, let's put a bet. Like, will tariffs cause this or not?
This is what futarchy is.
Yeah,
this is Robin Hanson's idea of futarchy. Exactly that.
Futarchy is super interesting. I wonder if any governments are actually running real pilots of that and testing it out. I know that happens all the time in DAOs because they have to. They're decentralized communities, and you want to make sure one person doesn't dominate the entire DAO treasury. But I want to see it happening in like IRL, like real things, real decisions, how tax dollars get spent.
Sure. Yeah. I mean, there are not that many countries in the world that I think would be open to this. Maybe like the UAE and like El Salvador. And I don't know who else.
Yeah, maybe.
Yeah, most countries are either sort of too authoritarian and autocratic or too like bureaucratic. Like European countries would never do futarchy.
Yeah.
Because they believe in democracy too hard. All right,
just getting collective opinions. We should do a futarchy for like MTS, like internally, like what snacks will get eaten first.
Yeah.
And it'll be like to make all of our collective input decided what we're gonna order.
Totally. Do you have a cutoff, or should we do the next article?
Yeah, have my next meeting at 12:30. So.
All right, so
we'll be back. We'll cut with break, but that was an interesting deep dive.
Yep. are back. We are live with a very interesting article. We're going to deep dive, time permitting. We're going to deep dive this article from Anton Leicht, who we've had on the show before. He's really brilliant. He's one of the best, I think, most underrated thinkers in AI policy right now. I think he's kind of like the next Dean Ball. Top, high praise. And he only has 5,600 followers. Wow, his Twitter bio says, allegro ma non tanto. I'm not sure what that means. Let's ask Claude to translate. I remember Dean Ball's old Twitter bio was allegro con brio. Allegro ma non tanto is an Italian musical tempo marking that means fast but not too much. I get it. So you want AI progress to be fast but not too fast. What about allegro con brio? Fast with spirit, with fire. So I guess this is sort of a reference to that, where he's saying fast but not too fast. So he just wrote this article last week called "The Moonshot: Real Sovereign AI Has Never Been Tried" on his Substack, Threading the Needle, which you should check out at writing.antonleicht.me. So he says, the U.S. government shut down Fable 5. This is a big deal. The effects on U.S. allies were not only not the goal, but weren't even seriously considered. In 2026's AI policy, the rest of the world is so powerless that can be cut off from frontier AI as mere collateral damage of domestic U.S. policy. So he goes on to talk about how, powers just can't rely on American AI anymore if they want to have frontier AI capabilities, because frontier AI capabilities can be revoked from them at any time. So, yeah, the frontier of AI capability is controlled by a maximally volatile version of the U.S. executive branch. No ally can truly rely on American frontier AI, and any reasonable country would conclude that it simply needs its own frontier AI, however high the cost. One country that concluded this is China. China is putting the full support of the state behind building their own sovereign AI stack, all the way from indigenizing EUV lithography, so building their own version of ASML machines, all the way up the stack to building their own chips with Huawei, building their own data centers, and then building their own frontier models. So really great stuff. The challenge, competing on frontier AI on purely technical terms is difficult, and middle powers are not set up to do it at all. So they need a project to do it, while under adversarial pressure from the US and strict scrutiny from fickle electorates. Okay, there are two ways to read the remainder of this essay. One will read this as the plan, what we should really do if we have the willpower. The other will read as a reductio ad absurdum. See, this is what it would take, and that's why it would never work. Either way, all that's left to do is to look at how we could pull this off. I'm not so pessimistic. I think that if the middle power countries really wanted to build something like this, they could. Like, their countries are capable of moving fast when they need to. Like COVID, for example. The COVID lockdowns were like totally unprecedented, and yet they happened anyway. So who would actually do this? No single country could. The financial burden needs to be borne by multiple governments. So you need a coalition of liberal democracies. He mentions the strengths of each. Canada and Britain bring technical talent, and Britain also offers state capacity. This is true. There's an enormous amount of technical talent in Canada from like University of Waterloo, for example. Like so many tech companies in the Bay Area hire just straight out of Waterloo. Japan and South Korea bring further economic heft and semiconductor supply chain positions. That's right. South Korea, for example, is where a lot of the world's memory is manufactured through Samsung and SK Hynix. Japan has a memory manufacturer, Kioxia, and multiple other key bottlenecks in the semiconductor supply chain. Australia, Canada, and Norway could be attractive hosts for compute because they have lots of land and lots of energy. But internal strife is a large risk. It strikes me as unlikely that South Korea, Japan, or the UK would reliably join a coalition, but, you know, bilateral relationships deteriorate faster than you think. Just look at Canada and the US. Who knows who would join after another Fable episode or two? So on short notice, you can get together the UK, Canada, and Australia with a warm invitation extended to the UK, Japan, and South Korea for whenever they'd like to reconsider their American alignment. And cooperation offers made to the usual tag-alongs of Western alignment like Norway, Switzerland, or New Zealand. So what is the total population, economy, and other stats of this block? Let's do, what is the total population, GDP in general, and as a percent of the world, and other relevant stats. I'm going to say energy, production, and consumption. Other relevant stats of the following countries as a block. The EU, the UK, Canada, Australia, I wonder if Norwegians can use AI when it comes out, because like when you see AI releases that aren't available in Europe, it says no EU, UK, or Switzerland, but it doesn't mention Norway, which is not an EU country. And then we'll add Japan, South Korea, and Taiwan. So we'll have Claude figure that out. So once this coalition has been assembled, what would the actual vehicle be? It can't be a private company, a nonprofit, a government agency, or a consortium. It has to be a mix of all of them. So the vehicle to execute the project itself would need to be structured like a private company, which means leadership chosen on the basis of research taste and ability to communicate with funders and ability to stand up and scale up huge organizations, which governments often can't do, really. It will be spread across different cities, which also spreads out the second-tier effects of the project. Into this vehicle, existing teams from any interested domestic champions can be appropriated and absorbed. Organizations like Mistral and Cohere / Aleph Alpha, as well as various narrow champions like Black Forest Labs or 11 Labs, are concentrations of talent and expertise, but they are not frontier labs. You need to combine all of these teams together. Buying out roughly half the sector at near its current valuation perhaps makes up for $25 billion of the total cost. That is kind of a bargain. All of the structures, IP data, and teams for $25 billion or $50 billion, even that is a bargain. Because remember, one frontier AI lab in America costs $1 trillion. Let's see if Claude has finished answering. Nope, it's still going. Since the vehicle will require massive government support and whatnot, there will have to be a complementary government structure. So each participating country will designate a project czar, a senior domestic policy figure with real authority that are capable of figuring this stuff out. And then it will need funding, of course. As a rough approximation, $500 billion over 4 years. So compute is more than half of the total cost. Political shield, I'm not sure what that is. Talent is, top talent is expensive. How much do you think Anthropic is paying John Jumper and Andre Karpathy? Bridge compute, $25 billion. Legacy buyout, $25 billion. Grid and power, $13 billion. Getting this money is technically simple and politically difficult. It is technically simple. Like $500 billion is just not a lot of money for over 4 years, so it's $125 billion a year. What is the EU total budget? The EU itself, on top of the countries comprised of it, is about $200 billion. So 125 billion is a lot, but remember, it would not just be the EU itself, it would be all of the other countries. The total government spending of every country in the EU on top of the EU itself is certainly in the trillions, plus the UK, plus Japan and South Korea and all these other countries. Okay, now we have our number. So 805 million population, 41.2 trillion of nominal GDP, and 118 exajoules of energy use. Wow, that is a lot of energy. I'm going to say, other relevant stats, military spending, land area, trade. Okay, now compare EU, the entire bloc, USA, and China on all of these. Okay, capitalization approach, upside, yeah. Treasuries need to bear much of the initial 4-year cost. The upside of this capitalization approach is that the public carries all the early strategic risk, but in return also owns the resulting frontier lab. So it will be sovereign government equity, which would be useful for government financing. That's right, frontier labs tend to be worth quite a lot of money. So if this project actually did happen, it would probably have a pretty immediate return on investment because, you know, if you spend $125 billion on a frontier lab, you could easily imagine this kind of thing being worth $1 trillion or $500 million right away. Next up is the compute. You can't work on, skipping progress by finding a new paradigm or making progress on world models. You have to do it the way we know how to do it, which is LLMs. The price tag. Yeah, you can save on compute because you won't need to serve this model. It will just be a pure R&D project, so you won't need to spend so much on inference. The project might need as much as the currently scheduled compute build-out for one major American lab. So about 3 million Blackwell-class chips, so B200s, over the 4-year build, equivalent to 5 to 6 gigawatts of all-in data center power. Remember, the biggest data center currently being built in Europe is like 1.2 gigawatts. Comparing the block again. So way more people than the US, more GDP than the US, 33% versus 26%. Lower GDP per capita than the US. Much higher GDP adjusted for purchasing power parity. Higher energy use and comparable military spending. So yeah, it would be competitive with the US and China. It could be like a real third power if they were to really combine. Yeah, that's right. Industrial mega projects like building lots of data centers are difficult, but difficult in well understood ways that middle powers have sometimes navigated in times of crisis before. As late as 2022's gas shock, Germany, famously NIMBY-rich and laggard in infrastructure, managed to build LNG terminals within 10 months. So there's plenty of energy to get data centers online quickly. In the meantime, there will be a scramble for rental compute available before the clusters come online. Rentals available is kind of hard because there's so much demand for them. Rented frontier compute is very expensive, with Anthropic alone paying $1.25 billion a month to rent xAI's Colossus. So that's the easy part. The hard part is buying the chips without the Americans intervening. Like basically, if America is willing to restrict Fable export controls, why would they not also restrict chip exports? Next up is the coercion shield. That's what we're talking about. If America attempts to stop the sale of chips to the project in turn restricts resources, EUV materials, raw materials, and memory chips that the Americans need to develop AGI. Deployed right, this coercion shield gives NVIDIA everything they'd ever wanted. So it gets NVIDIA to want to support the existence of the project. The talent. Once you have the chips, you need the talent. Two types of talent matter. The leading group of founders needs to be made up of truly exceptional talent that strongly identifies with the project, and the larger group of engineers needs to be up to the standard of the task, and most importantly, largely consist of former Frontier Lab employees. Yeah, so the leading group of founders need to be made of truly exceptional talent. This very much describes Anthropic, the current leading AI lab. The leaders are truly exceptional talent. Dario Amodei, Jack Clark, Christopher Olah, Jared Kaplan, Tom Brown. These are all like really impressive people. And they strongly identify with the project. They all believe in the mission. They believe in AGI to a degree that I think a lot of other labs don't. The latter part is vital and frequently misunderstood. Yeah, so no secret stays secret. Part of the balance of the Frontier Labs is that researchers will switch teams. They take secrets with them. Okay, recruiting. An interesting challenge, a mission they can believe in, and compensation high enough that joining is attractive rather than suicidal. So individual senior pay packages in the tens of millions, plus obvious perks like fast-tracked visas. Across the project, the personnel bill runs to about $65 billion in 3 tiers. First, a group of 7 founders of the caliber that currently co-founds a Frontier Lab. They would need guaranteed packages in the hundreds of millions each. Second, a senior research cadre of about 150 on meta poaching terms, 5 to 8 million a year apiece, each clearing into the tens of millions over the life of the project. Perhaps 10 billion over the 4-year build, then a technical core of about 3,000 staff. These will be more expensive for the project than for a Frontier Lab because there's no IPO or equity lottery. So they'll need 40 billion for the entirety of the staff. And then all of the unvested Frontier Lab equity. Plus all these coding agents. We're running low on time. We got monetary matters coming up. But you should read this article. It's good. You should follow Anton, and hopefully we'll have him back on soon. So we'll be right back with Jack and Max.
Welcome to another edition of Monetary Matters live on the MTS network. I'm Jack Farley, joined by Max Weethy. Max, you look at the S&P, it's down only a little over 1%, NASDAQ down 3%. But really, there's so much action going on underneath the surface. And, I think of the quote from the Bible, the first shall be last, the last shall be first. Like, if we can just share the screen now, an absolute catastrophe today in semiconductor stocks. You look at Lam Research, 9%, NVIDIA, 4%, Broadcom, 3%, Western Digital, 9%, SanDisk, 13%. Everything in semiconductors is down. Actually, I believe the one semiconductor stock that is not down, or at least like a few hours ago, was Synopsys, which we talked about yesterday.
Well, that's because of the software.
It's because of software, yeah. And the beneficiaries are, of course, the defensives, your Walmarts, your Costco, energy catching a bid, real estate, healthcare, so now increasingly defensive sector, financial services, progressive, seen insurance as well. Interestingly, Max, industrials is also taking it on the chin, and really, like in the industrial sector, I believe the XLI ETF was down 2% today. It is very correlated with the semiconductors now, because it's the electricity and all the fabrication that powers the data center.
Yeah, we're definitely going to be talking about that in just a few minutes with our first guest, Travis Prentice from Inform Momentum. They manage momentum strategies. They're agnostic as to what the companies do. It's just what's working. I shouldn't say agnostic, because they are informed momentum. So they are looking at other things beyond just the pure returns. But I took a look through some of their holdings, and outside of the semiconductors, industrials was really top of the list coming into the month. So it's not surprising to me that industrials are not doing well. What was interesting to me about the sell-off is I didn't really see any news. I mean, we got some weak action yesterday from a lot of the mega cap stocks, but the semiconductors performed very well. Was there any news that you saw that sort of sparked this action today?
So a few things. Yes. Let's see. I believe SK, one of the Chinese memory players, I think SK Hynix, if not Samsung then, of course, said
Korean.
Yeah, what did I say?
You said Chinese.
So I have Chinese AI on the mind, as you know, so I apologize. Korean memory makers basically said we're going to our high bandwidth memory, which is for the advanced AI chips. It's made from the same thing as DRAM. We're going to instead of HBM, we're going to make more DRAM than we thought initially. So it's like, they're making less than they would thought of the HBM, the thing that you need for AI, for all this high-powered AI. So maybe that was a little bit of a signal to the market. And then also you're seeing a lot of pieces on just the incredible leverage that investors in Korea, investors in Taiwan, and let's be honest, investors in the United States are taking on semiconductor stocks. So our guest at 30 minutes, Dean Kernot, is going to be talking all about that and the potential that you could have a truly massive unwind there. So I'd say it's there. And Max, literally like the headline from Bloomberg, if we could still share the screen. Let's see, was
hey, Jack, the screen you're looking at is not the screen being shared.
Oh, I apologize. All right, let me. I don't know how that happened. Sorry, it's my bad. The headline from Bloomberg was like, the AI fears go global, and I think, Max, there's nothing that captures the globalization of fears over AI capex than my interview with Jim Chanos and Vaz Latev about semiconductors, where Jim Chanos says he has concerns about the disconnect in the profitability accounting for AI capex. This was played on Chinese television yesterday. And this is a Chinese TV station that within China, as well as around the globe, for the Chinese speaking audience, gets hundreds of millions of views in terms of audience. So I think that everyone loves to hear about how AI is a giant bubble. That's in the US and elsewhere.
Well, it's interesting because there are certain days where it feels like the US markets and what's priced into the US listed stocks is leading Korea. And then there are days where Korea takes a bath overnight. And that is what sort of leads the price action. Today felt like one of those days where Korea was what happened first, right? We had something where, we had a huge sell-off on Friday, and then everyone was freaking out when Korea opened on Sunday night, and they're like, Korea's down again. It's like, no, that's what that happened on Friday in US markets. This is one where Korea led the US.
Yes. It is I think I think it's a viable dip. I think it's healthy.
Well, that's what you did today. You told me that you added to your
to my long position.
Yeah, to your long position. What makes you say it's a viable dip?
I think the capex isn't going to stop, and I also, as you know, Max, today I shorted Meta, and I bought some very out of the money put options on Meta. I think Meta's AI strategy is the one that I like the least, to put it mildly. And I'm just thinking, like, what is going to cause Mark Zuckerberg to say, hey, I'm going to stop spending so much money in AI? It has to be the stock getting cut in half from here. I mean, the stock goes down 20%. You think that he's going to stop spending? No way.
Well, I mean, I think it'll be the point at which the ability to pay the talent he needs to keep up in the AI race. So at what point in time does the talent that he needs to keep up say your stock price keeps going down, my options are underwater? I mean, maybe you can do RSUs, but that tends to be the reset factor there. Because I mean, there's a reason that Meta went so low in 2022, why they changed their name to Meta, for God's sake, for a failed bet on the metaverse. So his willingness to go all in to the point of major, problems for equity holders is pretty well documented. I don't think he's the type of guy who changes his ways so much.
I agree. That's why I don't think he's going to change his way until the stock price goes down. I'm not saying it's going to be cut in half. I'm going to say for the AI capex trade to stop, the semiconductors primarily, for me at least, I need Meta to be half of what it is right now.
All right. Well, that's interesting. Well, why don't we talk about momentum a little bit? We are joined by Travis Prentice. He is the CIO at Informed Momentum Company. They manage a number of strategies across different market caps, geographies, all looking at momentum. Travis, momentum is one of the best performing factors, strategies in the market. It's also one of the most hated, generally because of days like this. They don't feel very good. Put it in perspective, how big of an unwind in the momentum factor is a day like today?
Yeah. Thanks, Mac. Hey, Jack. Thanks for having me on the show. Yeah, today was obviously an interesting day. Get a tough one for us, taking on the chin a little bit, but I think you have to put it in perspective. And, we measure medium-term trends. So your kind of classic 12-month, but with a little bit more recency bias on the prior 3. And today's feels like a little bit of a correction rather than an unwind. I know that sounds unbelievable to say as you kind of went through the litany of stocks that are down double digits, percentages. But when you actually look at the trend, like take Micron, for example, is only erasing about 3 days of performance with the pullback today. So the trends are still firmly in place when we look at most of these stocks that are under pressure today.
Okay. And so I've always wondered how much negative performance do you need to see for something to no longer be considered high momentum? Like, what would we need to see from Micron for it to fall out of your portfolio right now?
Yeah, that's a great question. And it totally depends on how severe the correction is to really implicate the general momentum score. Because you can imagine at a 12-month trend, it takes quite a lot for it to change, to implicate that 12-month score with 1 day's performance. But it is possible. So I think being a good momentum investor, you have to maintain extreme discipline. So when we have today's like this, we're definitely monitoring the situation, pun intended, and observing how the momentum scores have changed. But for what we see right now, and we'll update every score at the close here shortly. But what we see most of all is just this is a tiny blip so far, but we'll definitely monitor how things change from here.
Now, what about at the beginning of the month, right? We had a day similar to this back on June 2nd. Semiconductors powered higher, continued their momentum. That is a lot of the stocks sort of at the top weightings for a lot of momentum investors. So, but the broader indices didn't reclaim those highs. So my question would be, what about momentum broadly in the market from the beginning of the month to now?
Yeah, it's been quite a run. I think in general, I think just momentum in general has had a very strong month to date, very strong quarter to date, and also a very strong year to date. So a little bit of a correction would be kind of what you anticipate. Now, the broader indices themselves, I think if you look at the small cap markets like IOO or IMM, those are kind of interesting. They're hitting like 52-week highs right now, a little bit of a pullback today. But before today, that's where we saw some pretty good momentum in terms of not only price trend, but actually hitting a 52-week high, which is a very strong momentum signal as well. But within, I think under the hood of the markets is where all the action is. So, you mentioned semiconductors, hardware, memory versus software. And there you're seeing a massive dispersion this quarter to date between those. So momentum usually get paid on your winners, what you're long, and those are getting paid very well. But on the other side, what you don't own or what you're short in a momentum strategy, the dispersion between the winners and losers so far this quarter has been extreme.
And are you short any of the sort of reverse momentum, or are you long only?
We're long only, but obviously we choose to not own stocks with low momentum. So relative
addition
to the
by
index,
subtraction.
we have a negative exposure.
So, but if we have a bear market, and let's say the stocks that are up the most or down the least is like Coca-Cola or your typical risk-off stocks, you're long those types of stocks. Are you seeing any positive momentum in risk-off stocks like your Coca-Cola or your Costco's or something like that?
Not yet, but we are seeing some select stocks within that. I mean, I would point to CVS that has really had some strong momentum, and that would be more in your consumer staples healthcare area. So selectively, there are some stocks with high momentum in those sectors and industries. But I would say in general, when you talk about the defensive trade, that had the beginnings of trend in kind of the March area when we had the big risk off with obviously what was happening in Iran, but that's quickly dissipated. So from a medium term trend perspective, the game has really been all in tech and industrials and very little else. So we've seen momentum cluster pretty strongly around kind of the AI theme, whether it's in technology, semiconductors, hardware, and broader industrials. And that's a global phenomenon.
And does your strategy look 100% or rely 100% on price momentum, or does it also rely on fundamental momentum such as revenues and profits going up, as well as other factors?
Yeah, absolutely. So we believe the highest expression of momentum investing is that price is signaling business improvement. So we focus everything on that intersection of prices that are outperforming. So stocks that are outperforming, but intersected with business or fundamental momentum. So the congruence of both those things are what we look at. So we monitor both fundamental trends and also price trends. But also our approach within broader momentum strategies is we take a very risk mitigated approach to deliver that expression of momentum or that exposure to momentum to our clients. And so I think in these times where we're seeing momentum become very crowded, we're seeing a lot of stocks go parabolic in terms of price performance. We do mitigate that risk by taking gains when companies and stocks are extended like they are now. So having risk mitigation is also part of informed momentum.
So my question would be, have you been taking risk off the table in this run? And, there's a lot of commentary you'll sometimes see, like CTAs are sellers at this level. So my question
commodity trading advisors.
Yeah. Commodity trading advisors, they're trading trends. It's different than momentum. It's index trend usually or futures. And so my question would be, is it similar for momentum investors where there's a level where you become sellers of these companies? And how far are we from those levels for momentum investors? Obviously, you can only speak for yourself.
Yeah. I can speak for myself. And when we look at cross-sectional momentum or relative strength from a stock by stock perspective relative to the selection universe, depending on the strategy. But yes, I mean, I think that's where we're different than kind of a purely quant expression of momentum that you might see in some ETFs where, we rebalance our portfolios incrementally stock by stock every single day when the signals tell us to. And part of our risk management techniques would be to sell or trim exposure of overappreciated companies when they get very extended on their trends, i.e., how much above their 50-day moving average, their 200-day moving average. And with some of these stocks, like a Micron, for example, which is taking it on the chin today, is about 40% above its 50-day moving average coming into today, and well above the 200-day moving average. those are pretty extended signals. So yes, we've been taking some off the table in the last month or two as these companies have become extremely extended, because we believe momentum works for largely behavioral reasons, where in the beginning of a trend, if we go back to the memory trade in the fall of last year when we were initiating positions, there was an underappreciation of what was happening within the memory and the hardware trade broadly. But then ultimately, the reason why momentum works too is generally there's an overreaction to current trends. So this movement from underreaction to new information, new trend, and then overreaction is kind of how momentum works, from a factor perspective. So you want to be buying the underappreciation, the new trends, and limiting or trimming your exposure when things become overappreciated.
What are the underappreciated trends you're seeing in momentum right now?
Yeah, I think there is some interesting things going on in consumer discretionary. Now that the gas prices have come down, energy prices have come down a bit, you're starting to see a little bit more trend occurring within consumer discretionary. I think that's an interesting spot. Biotech, more recently, in the US, has showing some signs of momentum. So there's definitely some stocks within that sector and industry where we're seeing new momentum or underappreciation. So momentum is adaptable. It's kind of like a chameleon, right? We don't kind of care where the strength comes from. Then we're always looking for what's new and new and trending, and kind of moving away from some of the overexposed or overappreciated trends. And that's the great thing about momentum. There's always something working somewhere. So we're always looking for that new trend. But those would be some of the areas I would point you to.
Biotech. Okay, that's very interesting. Tell us about, you said like the microns of the world may be a little overappreciated right now. Would you say that the semiconductor complex broadly is overappreciated, or when you look at your signals, you're saying, there's actually some signals that this is got room to run?
Yeah, I would say in the very short term, they're a bit extended. So I would anticipate a correction when you have things that's so far above their moving averages. That would be a normal pullback. And I think that's the situation we're in. We continue to monitor it, obviously, but right now what we see is this is a normal correction. And so we're not adding maybe to exposures, but we're still holding these stocks because they're very, very strongly trending, even despite today, from a medium term perspective, both not only in the price trend, but in the fundamental trends. These are very well established trends, although they may be a little bit later in the game, they're still very strong. So we are still holding these stocks. We have a very strong exposure and overweight bias towards these types of stocks in semiconductors, hardware, and memory. But when they do get extended from a risk mitigation perspective, we will trim some of those larger positions because they're so extended in a price perspective.
Now, what about the sort of second order AI winners, right? Industrials, it's clear that it's flowing through to the companies that are perceived to be benefiting from all of this AI CapEx spend. How strong is their momentum, and when did that trend really start to make its way into your portfolio?
Gosh, I mean, on and off for quite a while. I mean, the industrial trade, broadly speaking, has been very strong for quite some time. I mean, the makeup of it in terms of specific stocks has maybe changed based upon kind of the company performance. Like if you look at Primoris today, that's in kind of that industrial cohort that's not performing well today, and that has not performed well over the last 6 months because of some execution issues. So we look at the world stock by stock, but that broader trade has been in place for quite some time. I mean, multiple years. I think what's happening now that's more interesting to us is the AI trade is moving a little bit to more of the AI inference beneficiaries from the kind of the large language model and CapEx build out. So we're definitely seeing a kind of shift in some of the newer trends and more accelerating trends in those beneficiaries. So you think about GPUs to CPUs and inference. You think about edge computing, companies that are providing cloud infrastructure like the DigitalOcean that allows, and helps the agent traffic. So we're seeing a little bit of a nuance in terms of that AI trade and moving towards definitely the agent traffic, more AI inference. Part of that trade is where we're seeing kind of the strongest, newest trends.
Right. So you guys trade momentum across all the different market caps. I think a lot of people first got into the AI trade with the big companies like Nvidia, yep. And increasingly investors, whether they realize that they're momentum investors or not, a lot of people in the market are momentum investors, and they've been moving down market cap. So you've been trading small cap, mid cap, micro cap momentum for a long time. It's actually sort of the origins of the firm. How does momentum act differently for people whose portfolio is not full of those big, large caps? How much faster does momentum turn over when you start moving down market caps? And is that something that investors who have found themselves in non-US stocks that are, sub 10 billion need to be aware of when they're thinking about how quickly things can turn?
Yeah. The great thing about momentum, if you look at the research we put out and research of others, is that momentum tends to work across market caps and geographies. Now, like most other factors, they tend to do, in terms of a source of excess return, tends to be more dynamic the smaller cap you go, kind of the same with value as well. But I would definitely say within small and micro cap, and we're talking about either the US or the non-US markets, I would say that it behooves you to be a little bit more diversified. Because smaller companies, they may get going quicker and you may have some dynamic alpha creation, but it can be a little bit quicker, definitely more fundamentally volatile. So I would say momentum's a great strategy kind of no matter where you're looking at it from a market cap or geography perspective. But obviously, the smaller you go, I think a portfolio construction and risk management becomes even more important just because the volatile nature, not only just prices tend to be a little bit more volatile, but fundamentals as well. So I definitely think if you approach momentum in those markets, risk management is even more important, and having a little bit broader of a portfolio is probably a good risk mitigator as well.
All right. So you're saying if you've got 10% of the portfolio in a Micron, that's a little less scary than if you've got 10% of the portfolio in like a Bloom Energy.
Yeah, well, maybe not right now because they're so extended, but in general, yes, I think that's correct. But Micron's acting like a very much a microcap stock these days, so the volatility is pretty dramatic. But yeah, in general, I would say definitely you're going to get a little bit more volatility the smaller cap you go.
Travis,
but then
oh, sorry.
No, let's go ahead. But then obviously your return compensates you for the risk.
How the past 6 months, I assume the momentum factor has been working extremely well. How does it compare to the peak of 2021 or maybe, 1999 or other periods where the momentum factor worked really well?
Yeah, I mean, it has echoes of history, but this one's a little bit different. I think the most similar analog would probably be the late 90s. But even then, I think AI is such a bigger potential diffusion across sectors and industries than even the internet was. I think in that time there were some sectors and industries that are relatively insulated, but I think AI is going to have an impact kind of across the board. And I'm always hesitant to say this reminds me of this and that because everything's new and everything else has its own dynamics. And I think some of the market structure issues nowadays are vastly different, in terms of zero dated options, triple levered single stock ETFs, all these things, I think change the dynamics a bit. So I would say that, yeah, it reminds you a little bit of 99, but I think the more interesting question is where are we? Is it 99 or is it 96? So that makes a difference because if we missed out on 99, you missed out on a pretty big run. So these things are impossible to predict, and I would caution anyone to kind of try to predict. I think the best thing we can do is continually observe and react to changing leadership rather than trying to predict it. And I think that's why a systematic approach and momentum is so well suited for these environments, is that if you do it with discipline, you can ride trends while they persist. And who knows how long this will last. It won't last forever, and it will change at some point, but we won't be able to pinpoint the exact lows and the highs. But I think if you monitor trends, you monitor price momentum, it'll help you exit as well as we get on the other side of this cycle. But things can last a lot longer than most people think.
All right. I want to ask a question about the difference between momentum and beta, right? A lot of people talk about market beta. Oh, this stock is just, you weren't a good stock picker. This stock has a beta of 2, and that's why you're outperforming I'm sure that a lot of times how do you disaggregate the beta that a stock has from its momentum, and can a stock have low beta and still make it into a momentum portfolio?
Oh, totally. Yeah, it's kind of agnostic to beta. I think if you look at our strategies in general, and typically most kind of just momentum research, you'll find that the betas in our portfolios are actually sub one on average over time. So momentum is definitely not synonymous with beta. And there's oftentimes where momentum will be low beta. It'll kind of ebb and flow no matter where, just depending on where the trend is. So momentum can be quite boring, depending on which part of the market or which part of the cycle we're in. Now, right now, though, momentum and beta are kind of friends. Right. So momentum, the high momentum stocks also are high beta, but that's not always the case. It just happens to be right now where we're seeing, if you look at today, actually, beta and momentum are the two worst factors on a daily basis today, and that's because momentum and beta have kind of become friends over the last 6 months or so. But not all. But this doesn't always persist, and in fact, our strategies tend to be beta under one.
And so, I guess I want to talk about it. It's so hard not to think about the end game, right? It feels like it's been going for so long. And my question would be for momentum. I mean, what does the end usually look like? Is it always a momentum unwind? Or does it typically peter out slowly over time? What does it typically look like? And has that maybe changed over the course of your career? I mean, we can only reference, it's so hard not to reference more recent times, but it feels like the quickness of sell-offs and rallies is just the nature of things.
Yeah, yeah. I mean, I think we always got to try to maintain perspective in these things, and certainly our perspective goes back almost 3 decades now. But generally, I would say that the top or a change in leadership is generally a process. It generally doesn't happen on one day out of the blue, although it's possible. Generally not likely. Generally, it's a process of topping. So when we think about this trade that we're in now, it generally doesn't stop on one day where you get one price performance that's down and then it's over. It tends to be a process. And what I mean by a process is you'll hit new highs and then maybe a sell off. And then if a company or a trend tries to challenge new highs and fails, that's a good signal. So when you start making lower highs and lower lows, that's kind of the beginning of a negative trend. So those are the things that we look for, and it's generally a process that plays out over weeks and months rather than one day everything changes. So those are the things that we'll look for. In a technical sense, that's called the head and shoulders pattern that you see a lot in terms of tops, where companies just fail to reach new highs. And when that occurs, you generally sometimes have the start of a new downtrend.
So, Travis, final question. Does today's action, where you had a huge unwind of the momentum factor, does it worry you, or is this kind of business as normal? If normally when the momentum factors works, you have daily one day unwinds or 2 day unwinds.
Yeah, I mean, right now we think this is just a blip. I mean, to just put it in perspective, we had and Momentum did have one of the best 3 day performances in a long time. So yesterday was extremely strong for Momentum, and today is kind of the opposite. So just we look at it about look at a little, stretch your time horizon out a little bit, and when you do that, you look at it and you say it's a kind of a very normal pullback. These markets are violent though. So I would suggest that you kind of look at it over a weekly or a monthly basis rather than a daily basis, because it's quite violent these days. It's a little uncomfortable, and that's why we have perspective and systems that allow us to look at it and say. And right now, the momentum trade has worked so well, and we expect a pullback, and that's what's happening. I don't think it's anything more than that at this point.
All right, Travis. Well, thank you so much. People can find out more about the Informed Momentum Company on your website, informedmomentum.com. As well, I saw that you followed me on X. It looks like you've got not too much of a presence on X, but where can people follow you there?
Yeah, you can follow us on X at InformedMo. And you can find us at www.informedmomentum.com. That's where we post all of our research, our insights, and anything we have to share about momentum in general.
All right. Thank you, Travis. We'll do it again soon.
All right. Thank you.
Max, so Travis, that was a great conversation. Thanks for getting Travis. The Travis just was talking about. He made a reference to, there's a lot going on with these leverage ETFs and the leverage going on in Taiwan, in Korea. We're going to be joined by not just a friend, but someone who's been really tracking this and honestly predicting this. Welcome, Dean Kernut of Macro Risk Advisors and also the Alpha Exchange podcast, a truly terrific podcast. Dean, I know you're a busy guy. Thanks for doing this. If we could just share the screen right now, 2 days ago on Sunday, while everyone else was, watching the World Cup, you said big picture, markets getting a lot more speculative. The DRAM ETF is $20 billion. The 3X leverage semiconductor ETF, $33 billion. So there's a huge, and the double leverage on SK Hynix and Samsung, the memory makers, $14 billion in assets under management. And you said that what's going to create an unwind is the reversal of the speculation itself. Do you think today is the beginning of that unwind?
I mean, that's a hard one to say. I think, my area of expertise is really understanding market risk dynamics. It's understanding volatility and then what to do with that with respect to trades like options. I think that one of the things we have to really appreciate is that market prices are driven by geopolitics, by economics, certainly by earnings. Those are all fundamental factors. The Fed and monetary policy, interest rates, of course, those are traditional factors that absolutely have mattered and will continue to matter. But the setup matters too. And what I mean by that is the introduction of financial products that live and breathe within the market, and then the exposures that those products invite matter. And sometimes those exposures can get large enough such that the amplifying impact of these robotic strategies and levered ETFs, I just put really at the top of the list where we know exactly what this thing needs to do. This thing called the SOXL, or the MUU, the Micron 2Xer, or, I've taken to calling the 2Xer on SK Hynix, I call it 7709 Capital Management because that's the ticker. And people thought, oh, this is a hedge fund. Well, I was joking. It kind of is. It's a fund that held $30 billion of a 120 vol stock, as of last Thursday. And we know its reaction function absolutely with 100% certainty. We don't know the reaction function of anything like we know the reaction function of a 2 times levered ETF. It's as robotic as it gets. And because these things,
and sorry to interrupt, screen down, please. If the roboticness is if SK Hynix is down 3%, sell SK Hynix. If SK Hynix at the end of the day, if SK Hynix is up 3%, buy SK Hynix. It's extremely pro-cyclical, and it basically does if it goes up, buys. If it goes, it's a buyer on the way up and a seller on the way down.
That's exactly right, and we can get we know exact numbers. Now, there's a lot of times when people in the derivatives industry, and they're right to do this, they're trying to understand feedback mechanisms for markets. And there's a whole industry that tries to estimate the market's gamma profile, right? Gamma is this second order Greek in options, which is a rate of change measure. It's basically a measure of how the rehedging activities for those who are long or short options can either induce volatility or dampen volatility. And it's a very worthwhile thing to try to estimate. What I struggle with is we just don't really know in terms of the market's risk profile with respect to gamma. Now, with respect to levered ETFs, we absolutely do know. And for the most part, these things are at the margin. They don't, you can measure them specifically, but they're not large enough to matter. And I just think with regard to the last, I would say month specifically, and I put SK Hynix at the center of the storm because there's so many things that have happened with this particular ETF that you can look at its reaction function, you can look at its AUM, And then you can look at what it's been forced to do. We can talk about how it's been forced into the actual options market to get its exposure, that you kind of saw an accident waiting to happen. And so I'd like to circle back to your original question of me, and I'm not trying to dodge it. What I was calling for was a sharp unwind. Now, do I know that it's the beginning of a bear market? Absolutely not. You've covered this, quite well, you and Max, on the fundamental shortage of chips and memory as part of the AI CapEx build out. For all we know, that's got another year, maybe more to play out. Maybe it's 6 months. I don't know, but it's a fundamental shortage, and so it seems to be an underpinning to the bull story. But it doesn't mean that you weren't seeing increasing signs that you could triangulate and see a very sharp unwind approaching and approaching quickly.
Dean, I want to ask about that SK Hynix ETF and the differences in how it's getting exposure. Most levered ETFs are using a swap with a bank to get that exposure. I believe you think that this SK Hynix ETF has had to use options to generate this leverage. And how does that make the reaction function slightly different?
Can we share the screen, please? Thanks.
Yeah, so the levered ETF, and we could take SK Hynix as an example. If it's got $15 billion of US dollars under management, that's its market cap. It needs to end the day with $30 billion of exposure. And the way to do that is through a swap arrangement with a bank. It's got JP Morgan, Goldman Sachs. It's got Nomura as a counterparty. Remember, Nomura lost $5 billion in the Archegos fiasco.
And those were
That was
swaps.
a margin loan, or basically a swap arrangement. So whenever you provide a swap, a Delta One hedge, you are at risk that your counterparty just has taken on so much leverage that the trade moves against it, and it's too fast. It can't pay you back. What we saw in 2024, November of 2024, as Bitcoin was going parabolic and as MicroStrategy, MSTR, was also going parabolic, we saw these two ETFs that were tracking MSTR. MSTU and MSTX were the two, and they were very big. Not as big as SK Hynix, but very big. And what happened in November 24 was that the swap counterparties basically said, look, this trade's just too big. We have no reason to think MSTR is going down. In fact, it's only gone up, and that's kind of part of the problem, is that up markets lead to speculation. They invite speculation, and these ETFs, the levered kind, have to buy because the product gets bigger. So you find this kind of self-reinforcing product feedback mechanism. And the levered ETFs, the swap counterparties, then said, look, it's too big. We're not providing the same leverage anymore. Go find the leverage elsewhere. And those two ETFs waded into the listed options market. And I watched these prints go up. They were sloppy. Of course, the implied vol is enormous on the underlying. And this is exactly what's happened in SK Hynix, except I would say larger. It's just a bigger ETF. And so we started to watch the listed options market on Samsung, I'm sorry, on SK Hynix, the underlying. And you started to see these just enormous prints. And I've been highlighting, there you go, you're showing it now. The open interest ratio of calls to puts was basically 1 million to 10,000. It's a ratio of 100 to 1.
Wow.
I've been doing this a long time. I've never seen anything approaching this. So let's just look at it from the buyer and seller of these options. So first of all, if I'm the ETF provider, I'm in the business of providing 2x the leverage. I'm not an options trader, from what I can tell. Options trading is very complicated. Getting the right price for a listed option is very difficult. You've got to be very good at keeping your sellers in line. And the levered ETF is wading into a product set that it likely knows very little about, but the sellers of these options know that the levered ETF has nowhere to turn. It's not programmed to be in the listed options market. The prospectus gives it permission to own up to 25% of its exposure through listed options. Now, it doesn't want to, but it gives itself permission to. And I started looking, you can see this stuff on Bloomberg. It does publish the data. And it showed the first time I looked, it had 27% of its exposure through listeds. And so you start to read the prospectus more carefully, and you see that under exceptional circumstances, it can exceed 25. Well, these are exceptional circumstances. And then it's at 35. And then just 2 days ago, the ETF provider produces a document that says we're changing the prospectus such that we can go up to 40% in terms of our exposure. And you see that under its own reporting, it's at 37%. So these circumstances are more than exceptional. And to me, it's leading to a situation where the product's so big, it's so unwieldy, the tracking error gets very high at high vols, especially when you're in options, probably paying very large bid offers. And again, the feedback loop on the way up gets so big that at some point, whether it doesn't even need a negative piece of news on semis. It doesn't need Micron's earnings tomorrow. I have no opinion on that. It just means that the margin for error gets very small and the vols are so high, and the feedback mechanism in terms of amplifying on the way up and then back on the way down, you got to a point where I said, this has got to be 5 to 10 days away from a pretty sharp unwind.
And this is SK Hynix and Samsung are Korean stocks, not Chinese stocks, as I incorrectly said.
They are. Yes, they're South Korean stocks. The ETFs are traded out of Hong Kong.
Okay, yeah. So the ETFs, these leverage ETFs, we have a ton of leverage ETFs in America, but these specific ones are not in America. And also, just for people watching, it's kind of like if Apple was 3 times bigger and there was no Microsoft, and literally, like, these stocks are just by far the biggest companies in South Korea, by far, especially with the recent run up. Dean, so these leverage ETFs, again, the fundamental point is they're huge buyers on the way up and huge sellers on the way down. So they amplify moves to the upside and to the downside. So fundamentally, like the economics word for the pro-cyclical. But just the fact that they had to move from getting the exposure via swap to be via options, just could you in simple English for us and our audience here, explain what the significance and consequence of that shift is?
Yes. And so this is where I couldn't get close enough to, I don't work at this company. I'm not in Hong Kong. I'm not in South Korea. I'm talking to people that are a little closer to it than I am. But the early prints had indications that this had to have been a levered ETF because you're buying short dated, very deep in the money call options. So if you're a levered ETFs, you want the most amount of delta that you can get, which is a deep in the money call options. Most of the call options that you saw printing, these 990,000 call options of open interest, all were initiated with a delta north of 90. Okay, so that's a very deep in the money. They initially bought June calls. They've since rolled those to July. Even the process of rolling is just the market maker on the other side of that is going to get a better deal than you are as the ETF provider. They just know more about it. They know you're a taker, right? That you need to roll this trade. And so, there's a lot of slippage. Okay, so that's one concern. Now, they go into the market, they put up these deep in the money calls. Now, I don't want to get too technical, but your audience is steeped in markets and finance. A 90 delta call has got a lot of delta to it. The risk profile of a 90 delta call is actually the same risk profile as a 10 delta put. Okay, so the deltas are very different, of course, but the Greeks, meaning the gamma, is the same. A 90 delta call is the same gamma profile as a 10 delta put. And the reason I want to make that clear is when the market maker sells the 90 delta call to the levered ETF company, there is delta risk. I'm not sure exactly who's taking that delta risk, but once the delta hedge is on, so the seller of the 90 delta call, that could be Jane Street, Citadel, Susquehanna, big, large professional traders of vol, they get their delta on, and now basically from their perspective, they're short a deep out of the money put. Okay, so this is where I want to get to your question around sort of reaction functions. The levered ETF, once the stock falls, if it falls by a lot, it needs to de-risk its exposure. Now, what's interesting is by doing it through options, in some ways, they have the call option. The call option for them almost de-risks itself. In other words, the delta for the call goes down for them. But in its place is the market maker. And so if you think about the market maker being short a large amount of deep in the money calls, which for them is a deep out of the money put, okay, and the stock gaps down, that market maker needs to sell. Its delta goes up and it needs to sell more to rehedge. So it does. So the levered ETF using options doesn't change the fundamental reaction function of the levered ETF. It just transfers a little bit of it to Jane Street or Susquehanna. Okay, so there's still an onslaught of selling by a counterparty. Some part of it's going to be the levered ETF. Some part of it's going to be the market maker who's short the downside put. The same amount of delta needs to be sold. It just gets shared a little bit differently. The same destabilizing process, if the underlying move is large enough, is still there.
Screen down, Max.
Yeah, and so the slippage that you talked about as well is important. So if you're a holder of this ETF, levered ETFs have been known to sort of go to zero naturally just because of this rebalancing function. If you have a volatile enough asset, that rebalancing is going to eat away at the equity value that ETF has. But there's another function, which is that the swap costs money, right? That the swap that they're getting from the bank is going to cost them usually SOFR plus a couple of bips. And so my question would be, is the slippage, the sloppiness of the trading that you're seeing, is it going to create even more decay from the roll and from using this other product?
So I haven't looked closely at that slippage. So as you say, the financing component of this is, again, they're not even responsible for the delta hedging. They're looking at it as a gap risk product. They say, look, I'm going to collect this much premium. And again, it's very similar to the Archegos swap counterparty. In that case, they're fully hedged and they're just collecting a financing fee. Now, of course, that went wrong. And so there's no amount of financing fee that can make up for it. But in general, the financing fees, the swap fee, can be pretty high. They wouldn't be in the business otherwise. That high fee gets passed along to the end user, right? And
not via the expense ratio. It just comes out in the price. So if you look up the ETF and you see, oh, I'm being charged 100 bips or 80 bips or whatever, that does not include what's going to the bank to pay the swaps.
Yeah, and in this particular prospectus, I think the ETF fund is called CSOP, is the kind of acronym for the company. Boy, they list some enormous fees. I mean, 5 to 15% to 20%. So there is a lot of slippage there. It all feels great on the way up. The thing that really, just back to just levered ETFs in general, let's just get away from a levered ETF being forced into options, very suboptimal, being a taker of a swap financing fee that's very high, passing that along and not really disclosing that properly. Those are not great. The trading strategy itself, which is very robotic, you could replicate this thing yourself very, very easily. But if you looked at it, you never would. No one in their right mind would actually commit to this trading strategy. It requires you to get so much bigger on the way up. And that's exactly what happened. Unless something goes up and up and up and up, right? The nature of geometric compounding, the market cap gains, and then your trade size getting larger and larger, and then ultimately, at some point, something's going to go down, and it goes down when your positioning is the largest. I posted something on Twitter last week on SpaceX. I mean, incredible. The stock goes public on Friday, and by Monday, there's the levered ETF community is lined up, right? There's SPAX, and in each one of these prospectuses, it's 100 pages. No one reads it. It's sad. Unfortunately, you can't protect people enough from their own mistakes. But in each of these levered ETFs, there is a grid, and the grid essentially shows the performance of the underlying asset. Is it up 20%, 40%, 100% over, let's say, over the course of the year? And then it shows the simulated performance of the leveraged ETF under different vol assumptions. And what SpaceX showed, or the SPAX one, that just made me a little angry as someone that, I think everybody's got to do their own homework, but this was just so disingenuous. They show different vol assumptions, okay? One of which is 10 vol. Do you know what asset real?
Yeah, which is a tiny thing. And sorry, just to be clear for folks, we're not talking about an individual company. We're talking about a leverage ETF on that company. And and that when you say prospectus, to be clear.
That's right. Yeah. I mean, listen, SpaceX could be the next $5 trillion company for all I know. It's going to be a high vol asset. The options are 100 plus vol. The stock's moving 5 to 15% a day. It's going to continue to do that for a while. To add a column that says 10 vol to this simulation, 10 vol assets move 50 basis points a day, never really much more. That's incredibly deceitful, and it makes the whole table look different. That table should start at 40 to 50 vol and probably go to 150. The table is going to look a lot different. That's all. It's the math is the math. The trading strategy for levered ETFs could lead to incredible results. We talked a little bit, or I've talked a little bit about SOXL, the 3Xer on the SOXX ETF. Max, you and I had some back and forth on this on Twitter. Boy, that thing's done incredibly well, right?
Even better than 3X. Even better than 3X. Yeah. Because of
even better than 3X. It can produce results that are better than 3X. But I think the main point is that at high vols, and I would put anything, north of 60 vol realized as one where the results are not going to be great relative to thinking that you're just getting 2 times the performance of the underlying over a long stretch. It's just that vol drag is going to kick in eventually, especially at 60 vol or higher.
I want to talk specifically about SOXL and the 3X nature of it. In those filings for new individual stock ETFs, people apply for 3X levered. They haven't been approved. I think there might be some that exist out there from a different time, a more civilized age. But we don't get them anymore because we've looked at it and said, look, all you need is for this asset to have a 33% drawdown and the product is wiped out. Yes. Right. And, SK Hynix was down. I took a look at it. It was down basically 13%, 12.5% last night. So you only need a couple more of those days for that 2X levered ETF to be completely wiped out. Yeah. Soxel is on an index. And so they've allowed this to happen. But this is an index that is trading at absurd vols with absurd correlations. So to what extent would you say that the Soxel, the SOXX linked ETF has similar risk that regulators are not even allowing for single name stocks that are trading with less vol than this index?
Yeah, let me make a couple points there. So you mentioned a 3Xer and a 33% drawdown in one day, and that's it. And that's of course mathematically true, but it's it's, I don't want to say more complicated, but you don't need to be wiped out. If you have a 3xer and you have a 20% down day, you're down 60%, right? And that's kind of permanent impairment. In other words, it's not like a stock going down 60%. These are trading strategy losses where capital has gone. It's not the market repricing the stock lower. It's not like the earnings have gone down and the market has put a stock into disfavor. This is capital that's been incinerated. I go back to the VIX ETF implosion in 2018. My firm, Macro Risk Advisors, was a very big part of calling for that early and helping guide people through it. There were two of them. One of them, the XIV, actually went under. A second barely didn't go under, but it may as well have because the capital was permanently gone. In other words, if you got $2 billion of capital under management and you get a 98% drawdown, you're not bankrupt, but you're basically lights out because there's no way you can ever get that $2 billion back. And it's different. It's just a different proposition than a company where the stock goes down. They can work their way out of it over time. It's not pretty, but it's not the same thing as the incineration of a trading strategy loss. And that's really what the levered ETF is effectively absorbing. It's the incineration of capital. Back to the SOXL, the SOXL, and SK Hynix, we mentioned Samsung. Samsung and SK Hynix are 95% correlated. They may as well be the same thing. The same ETF company has a levered ETF on Samsung as well. It's only got $4.5 billion of capital, but you sort of want to add them together. And you can't think that SOXL is all that different than SK Hynix either, right? There's the DRAM ETF. Brilliant. The ETF provider, I think it's called Roundhill.
Yes.
They saw an opportunity. They brought SK Hynix and Samsung into an ETF and created an ETF, put it as 50% of the market cap. And it's got 20 odd billion dollars of assets under management in a month and a half. Brilliant, right? And so my point on this is these things have become too alike. SOXL, Micron, SanDisk, SK Hynix, the correlations of these things are extraordinarily high on the way up. Things usually get more correlated on the way down. When things are this correlated on the way up, you have a certainty that they're going to be this correlated on the way down. And, markets invite feedback. They invite speculation. And that's just been my big thing. Back to, again, your original question, I'm not here calling for a bear market. I'm just really asking people to appreciate the feedback loop, the mechanisms here, and the vol events that occur, not based on news, not based on earnings, but based on the introduction of amplifying products themselves.
That's such a good point, Dean. People could find you on X at alpha_X_LLC. And people should look up variance drag. Like if, Apple is up 1% on Monday and down 1% on Tuesday, it will be overall down slightly. But if you have a leverage ETF on that really compounds. And also like variance drag is Apple's never going to go to zero because of variance drag, because it has earnings and it can buy back stock and stuff. But if you have a 3X leverage Apple ETF, like theoretically these things could go to zero. Maybe not on Apple, the higher the vol, the worse it is. And for, like MSTR, the MicroStrategy ETF is down probably 99% from its peak in probably 18 months ago. Dean, thank you so much. And
Pleasure,
thank you. Really thanks for doing this. All right. We'll be back tomorrow at 4 p.m. Eastern, 1 p.m. Pacific. Back to the folks at MTS. Thanks.
Welcome back to MTS. I'm here with Josh Ellman, one of the people behind the growth of products you already use, such as Twitter, LinkedIn, and Robinhood. And today, he announced that he's joining A16Z as a partner, and he is specifically planning to back the next wave of AI-first consumer apps. Josh, I am so excited to talk with you today.
Thank you. I'm so excited to be here. It's been an incredibly fun day to get to share this news and start talking about it with founders and friends and everybody.
Oh my God, what an exciting day. And we actually get to chat. And you're, funny enough, you're just around the street right now in the San Francisco A16Z office. So we were joking right before this. I'm like, we should do this in person next time.
Next time for sure.
Oh my gosh. So you are joining A16Z and you're doing it specifically to back consumer. And I find this really interesting because right now, a lot of the money and attention is going to enterprise or infrastructure or agents that do all this work, but you're betting on the things that everyday people use. And I'm curious to hear from you, why consumer and why now?
Well, it's funny. In our industry, I feel like the attention always swings in waves, but the reality is people have been using technology more and more across my entire career. And I mean, we're doing incredible things that you couldn't have even imagined 25 years ago that everyday people just use in their lives. And I feel like with what's happening with AI, the ability to build products differently, build different products for users to do different things with them in their lives. I mean, we're just at the beginning of scratching the surface of how this is going to affect everybody every day. And I think there's just room to build new things. There's room to build something cool that people will actually try.
Yeah.
A few years ago, people were like, another app, I'm good. I don't need to install another one. But now they're like, whoa, you can do that. And that's what causes these great waves of change, and especially in consumer.
No, you're totally right, because you can actually get super micro, super niche, and build for very niche consumers that maybe before there's not a big enough market, or it's way too hard to just build for a subset of 100 users. But now you can get really specific and build things that are relevant, right?
You totally can. And what's even cooler with AI and even this ability for this simplified coding is you can even build a great base product that'll serve millions and millions. And each of those 100, person niches can customize it for themselves. So I'm really looking for like the platforms that are like, hey, we can serve so many people in their lives, and we're going to let people use natural language, other things to tweak each version of the product, personal, customized. It's what I think we're really going to have this next wave of truly personal software.
Yeah, 100%. And one thing I specifically like about your career and your background is it feels like you're someone that can identify that early consumer spark and what consumers are doing that there's not products yet for. And you've identified that early with your career at Twitter, with everything, with LinkedIn and Robinhood. And I'm curious, like, what you're seeing here that maybe you don't think others have seen quite yet.
Throughout my whole career, I've always thought about this thing, which is you get a small group of people doing something and you start to look at what they're doing and you go, wow, they're really changing their life. They're reorganizing their life all around this product. I remember the first time I listened to a baseball game on the internet, and it was an incredibly different experience than having to tune into the radio because the game wasn't playing in my area. And that was everybody's going to want to do this over the next, 20 years. And with AI, what I'm seeing now is people are vibe coding their own apps.
Yeah.
They're literally going, I don't have the thing I want. I'm just going to go make it. And I don't expect everybody in the next 20 years to completely vibe code every single app they use. But I think they're going to expect everything they pick up to be customizable and tweakable. And that's only possible because of the power of these incredible models, what we're building, and this is going first in the enterprise, but I think it's going to go to consumers in a major way.
So you see the main consumer adoption that is happening right now being like builders. Consumers will start being builders and making their own software. Is that the big theme you're seeing?
I think the first thing we've seen is ChatGPT has completely just changed the idea of talking to your computer or to an interface. We had all learned to speak Google, type in the right 5 keywords to get really good search results, and it didn't work. So you tweak your search. And then all of a sudden ChatGPT a couple of years ago was just like, type in what you're asking. It will give you a response in natural language. You'll keep going. And now let's take that to everything. I got to work on Siri AI, and it was all about like, oh my gosh, what time is my next meeting? You can just ask that and your phone answers. Or you can say, who's my meeting with, and give me a little bit more about their background. And it can go pull that information all together and give you that answer. And those are just these little micro things that we're going to expect everything to work this way.
And how are consumers going to be engaging with this? Earlier you said, oh man, not another app to download. But my hunch is that consumers are not going to be on apps and clicking buttons and looking at user interfaces. Where do you see this all going?
I mean, I think the answer is both. I mean, I said a couple years ago it was not another app because they weren't feeling that different,
Yeah.
but now they are.
Yeah.
And all of a sudden you're like, wait, that's another app to let me do that. People are trying things all over again. And I think it's gonna be this combination of natural language as a primary interface, make it really easy. But when you really get into exploring the results or content or information, you're still gonna want it visual. You're still gonna want to tap and touch. I mean, we are humans, we're tool users too. We've always had mouths to express, and learn language, but we've all had our hands to manipulate things too. And so I think we're going to want to still do both in so many ways.
You're still going to want to do it. It's good to know that the app era isn't dead. I personally like building apps. I like having a button that I can click on. But like I started using agents for so many things now that when I have to go on an app and like look and scroll through the settings and like find a button, I'm frustrated. I'm like, I just want to tell someone and have this handled. Like,
I mean, I think that's going to be the key difference is when it's like something that you don't have to do that often, expressing yourself and just getting it done is going to be much easier.
Yeah.
But when you're playing a game, you're exploring information, you're wanting to turn a page in a book that you're reading or something else, like you're still going to love that
It's true.
direct manipulation and ability to do that. So it's going to be this great balance, but it's not only going to be like tap, scroll, stare. It's going to be this new combination, this new modality.
Oh, that's going to be really exciting. And I'm curious for you too, because consumer is just a giant umbrella that can mean anything from social to games to whatever it is. What are the areas in consumer that you're particularly most excited about?
I mean, I think the reason that we like consumer as this broad umbrella is it's just what regular people are doing in their daily lives to get by. There's no ROI calculation. Hey, is this going to save me time or anything else? It's just, hey, in order to connect more with my friends and family, in order to shop and find the things I need to do, maybe at the best price, but also the best value for me. Maybe it's I want to plan a trip and have just the best experience. Help me make sure I'm going to have an incredible one. Help me manage my money. Help me figure out what I'm going to eat. Help me bring a whole bunch of people together to have better experiences in the real world. Like you have all these needs that we all want to get through the day. And how can we do a better job building tools that let you express those as simply as possible, let you explore the information and get them done? So I'm kind of looking at the vast world of if you're serving somebody in their regular life, I can't wait to help them and to help you build products that will do that.
I love that. I love that. And I would love if you can help me put on this investor hat. So I know you were also an early investor in Discord. So clearly you have this ability to spot what this consumer behavior is going to be and what's going to take off before others do. But there's also all of these trends. I saw this like graph the other day and it goes what everyone thought the new meta was going to be versus what it actually was. And you see these like every year, it's like, it's going to be this, it's going to be this, it's going to be this, this is what's hype. And then it's not always turns into that. How can you tell what's actually real, actually has substance, what's going to be the consumer meta versus what is just hype?
It's a great question. And there's so much. I mean, some people call it hype. I just call it excitement. We're all so excited to try new things. But I look for the ones that people don't just try, but they start using and they start really using and bringing into their life. And what I like to ask either users of a new product or founders who get to know their users is, what are people doing now that they didn't do before? Why are they coming back regularly? Why did they stop maybe doing something else because now this is solving their needs in a new way? And when you start to see that replacement for something else, you start to see we're all flocking here because we're doing this. Even if it's a small group of people, if you have a small group of people who've moved their lives, moved a whole new habit over to a product, you can do a much better job going, okay, how do we now bring that same transformation, that same transition to more and more people? And so I look a lot for finding those really small but really sticky groups. And then the other part of it is just talking to founders who are really good at sifting through the excitement for, hey, lots of people tried my product last month. That's cool, but only a few stuck. Let's really dig into those. And the founders who deeply understand that and then have a vision for where they want to take the product and those users, that's when it comes together. When I met the early Discord team, they were doing this for gamers. Gamers were completely stopping all the other forms of communication to now primarily use Discord. And not only that, but the founders, Jason and Stan, had a really clear vision
Yeah.
for where this could go and what they could be and how they could really transform the way that, hundreds of millions of people connect. And that's what's happened there. And so you just, I look for those two things.
Yeah, no, it sounds like you can identify which are the people that are really, really sticky. Like in Discord, it was really, really sticky amongst gamers. And so then the founders are like, okay, we know our target audience. We know which people this is going to resonate with. How do we just build the most stickiest, best product that changes their consumer behavior, which is pretty cool. I'm curious, like, why consumer? What excites you so much about this space?
It's funny. I don't even think of it like a space.
Yeah.
Like I just have
It's true.
always since I was in college said, how do I just build something for people that I will use in my life, that the people around me will use in their lives, that people I've never met but are just trying to get through their days can use to enjoy things better. I still remember this moment in 2003 when I moved into a new house and we met our neighbor and they opened up their cabinet and they were like, we use Real Player to manage all of our music in our house. And I had worked on that product for years
Wow.
and I had literally just met them. And it was
Oh,
just
what a good
like
feeling.
this moment. And like, I still get these from time to time for all these things that I've gotten the privilege of working on. And that's what I love about consumer is you're really just helping people have better days.
Ah, no, I completely agree. There is no better feeling than working on something and then you start to see your friends or family or people someone in the subway using a product that you actually
so
helped
cool.
create and you had like that user empathy. You understood what that user needed and you turned it into a product, an art form that actually helped their lives. And so I totally get it.
Yeah, it's so fun.
That's really cool. And I'm curious, I know we only have a few minutes left, but I would love to learn from you. Where do you see the future of AI consumer going? Like what does the next 5, 10, 20 years look like?
I think we touched on this a little bit at the beginning, but we have this generation of people who've grown up mobile native. They're growing up. They're getting through middle school and high school. AI native now. We think we had the first college class that started to graduate where ChatGPT was a big part
Yeah.
of their time in college, and they also grew up using Roblox, Minecraft. These experiences that were worlds that they controlled, that they manipulated, they built, that they shared with friends. And I think over the next 5 or 10 years, that's just what we're going to expect from software. We're going to expect
Wow.
these worlds that allow us to go in with the people we care about, use our natural language to make them just right for what we want, be able to get things done, connect, whether it's having an agent go and do a bunch of shopping for you and bring you a bunch of options, have it planning something for you, like having you help your family get through the day, or just you and a young group of friends have a great night out on the town. We're going to have all of these tools that will come together in these worlds that we've built.
Yeah.
And I can't wait to meet the founders that are truly making this happen and partner with them to help them reach, that entire goal and that dream from something that starts to work to really getting it mainstream and durable.
100%. Josh, it was such a pleasure getting to chat with you today and seeing your energy and excitement for the future of AI consumer and for the founders that are working on this is so contagious. And so it was such an honor getting to know you, and congratulations on joining as a partner.
Thank you. It's so exciting to be here. It's such a great firm, and I look forward to working with so many founders and other people building great stuff in consumer.
Yeah, and you have to come by the studio in person since we're
I'll
neighbors.
be there next time.
Looking forward to seeing you soon. All right, Josh, thank you so much.
Thank you.
And we'll be back with MTS.
live in the Situation Room with Jake Fitzgerald at Earth2Jake on Twitter. He has a very cool personal website, earth2jake.com, and he's doing robotics at South Park Commons. So, Jake, welcome to MTS.
Thanks for having me. Nice to be here.
Absolutely. So, first of all, what is South Park Commons exactly?
Yeah, good question. South Park Commons is basically an incubator where people find their life's work, as they describe it. So it's a lot of like second-time founders, experienced operators from companies that are figuring out what to do next. A lot of people are trying to start companies, but it's not required. I'd say it's like a pretty YC kind of setup, but it's been awesome. Lots of like really, really talented people. Yeah, it's been a lot of fun.
Fun. So what are you doing exactly in robotics at South Park?
Yeah, so I can give some background on myself and like how I got to this generative CAD stuff. Which is kind of what I'm working on now. So yeah, my backstory is like I actually studied robotics or mechatronics eng like 10 years ago. But when I graduated, I went into software. So I worked at WhatsApp for a bit. Then I founded a company called Derive, which was a crypto options desk before this. So spent my career in software, but wanted to get back into robotics this year. So joined South Park Commons, and my goal was not necessarily to start a company. It was more to just like learn or relearn the full stack of robotics. So I wanted to design specifically this like 7 degree of freedom robot arm to kind of refresh my skills, like learn how to design hardware, how to like actually, procure parts, put it all together, and then like train models on the hardware. And I assumed that I would find, kind of interesting problems along the way. And like, sure enough, the first thing I did was open CAD software, which is like this, kind of software to design stuff in 3D, which is a prerequisite to, getting any hardware, manufactured, whether you're 3D printing it or getting it cut from like a metal shop, like Cut Send. And the CAD software was like very, very tough and like counterintuitive to use, having not used it in like 10 years. So yeah, that's what brought me to the generative CAD work, which has been a bit of a, like a sidetrack from the core robotics work, but it's been super interesting. So basically what I started doing there is I just started like, so I opened the CAD software, and nothing wrong with the CAD software. It's very powerful. It's just very counterintuitive, I think, to like design in 3D, right? You're working on a 2D screen, but trying to design something in 3 dimensions. So the process is quite laborious, and like the tools or the software are different depending on what you're using. So I just started like prompting Codex and Claude to like generate 3D designs for me. And this was, I started, I think, back when it was Opus 4.6, GPT 5.3. And the results were like pretty,
Yeah, you did this with Fable, RIP Fable. What a great model. And it looked really good.
Yeah. It did, yeah. So the models I've kind of seen over the last 2 months or so, the models get progressively better at generative CAD specifically. I definitely think for the brief period of time I got to play with Fable, that was like a massive step change. And I think the reason Fable was so much better was specifically because it was much better at like spatial reasoning, because the process for doing this generative CAD work is like a pretty specific feedback loop where you ask the model to write some code to like generate a 3D file. And then to verify that what you got is like what you asked for, you take a photo of it and then feed it back into the model and you ask it, does what the user asked for look like what you produced? If it doesn't, you just keep iterating until you get something right. And the problem with the past models is like they're very bad at reasoning about images that are out of distribution, which is by definition like kind of what you're designing in CAD. Like the only reason you use CAD is to create stuff that doesn't exist. So, I'd be designing like a U bracket, for example, for my robot arm, and it would generate an S bracket. It's like complete wrong shape. Previous models would take a photo of that and say like, looks good, and then sign off. So the models would get like a lot of stuff wrong. But with Fable, it seemed like they got a massive bump in out of distribution, like spatial reasoning. And so the loop was able to be closed because the prompt that I posted, or the result I posted with that big humanoid, that took like 2 hours to run. So it was tons of these little feedback loops going through every part of the humanoid. And past prompts that I tried just like totally, like past models totally failed at that prompt. So yeah, it was super interesting.
So how actually useful is this humanoid model? Like, could you actually put this into production? Maybe not mass production.
No,
but like, could you make a prototype out of it?
No, definitely not. The prompts specifically for that humanoid was asking for like a concept render, so it's kind of intentionally not functional. I would still say, I don't want to overstate how good Fable is at this stuff. Like it was definitely, a big step up. But as soon as you put like real manufacturing requirements in there, as in you actually try and provide the model with constraints, like design constraints or requirements to produce a real thing, it still kind of crumbles. One thing I've been experimenting with is I'm trying to design the 7-degree of freedom arm, for example, which is a much simpler task than like a humanoid. It's just like one limb of the humanoid. And I have like a list of requirements for my own project and like an arm that I've designed. And I keep asking the models, given this list of requirements, can you just design an arm from scratch that works? And even Fable really struggled with that prompt, just because for whatever reason, like maybe the size of the context or just like, again, these kind of newer designs being more out of distribution, it still struggles to like close the loop. But doesn't mean it's not super useful. So I've open sourced this repo, which has like a bunch of skills to help models do this kind of work. And a lot of people have been using it for, like video game asset generation, for example, because it's actually quite good at that. There's like a ton of like peripheral stuff that CAD can still be useful for without being, like a super precise humanoid.
Interesting. How much better do you think LLMs will be at humanoid design by the end of the year? Like, do you think that, I guess a more precise question would be, when do you expect that a frontier model will be able to fully autonomously design a humanoid that is good enough to become a real prototype?
Yeah, good question. I guess it depends if you're designing the actuators from scratch too, but assuming you're using off-the-shelf actuators.
Yeah. Let's assume that for simplicity.
Yeah, I think it's realistic that just given the rate of change or improvement that I've seen in the last 2 months with the model releases, I think in 12 months we could expect that kind of functionality if the trajectory continues. Again, I think it's really about like improving the spatial awareness or like spatial reasoning ability of the models to close that loop. But I think it could produce a functional humanoid, whether it's like a design that could be manufactured in volume of tens of thousands. That's another question. Like I would just think of that as like 1 or 2 orders of magnitude, 3 orders of magnitude more difficult of a problem than just designing one prototype that can kind of work.
How good are models that are not Fable? So like GPT 5.5 Pro, for example.
Yeah, that's kind of my workhorse, 5.5 Pro. So again, it's for me, the way I'm using it as I design these like relatively simple frames for, say, a robot arm, I'm getting like pretty specific prompts. Say like I've got 2 actuators and I'm like, I want to make a frame that like connects these 2, and I describe in pretty verbose detail like what the frame should look like, how it should, like where it should bend, how it should connect. And even with that specificity, it still doesn't, it gets maybe like 60 to 80% of the way there. And so then the follow-up work is like, it's usually 2 or 3 more prompts to like, just tell it like this hole is wrong or like this bend is in the wrong place. before you get something that is actually right. So that's kind of the state of things at the moment for generative design. I would say it's and you can imagine like the errors compound if you try and like one shot a really crazy design at like big scale. So I still think the value or the value out of the models at the moment is in like incremental design, like kind of designing piece by piece as opposed to one shotting these like really complicated things.
What should people read or look at or follow if they want to get into robotics and learn more?
Yeah, good question. I mean, robotics generally, I think there's a ton of interesting stuff on VLAs and like new models. I'd say physical intelligence, the blogs they put out are excellent in terms of, they're kind of like state of the art in terms of robot foundation model research. Ben Katz, who also works at Physical Intelligence, has an excellent blog about mechanical engineering. He was the creator, I think, for his MIT thesis or research project. He basically designed or invented the quasi-direct drive actuator, which is the actuator that's used in, basically all humanoids, quadrupeds today. So his blog is super interesting. I think to an extent, yeah. I don't know the exact URL, but Ben Katz is his name. Yeah, he's a well-known mechanical engineer in the space.
Robot daycare.
Yeah, that sounds right. Yeah,
robot-daycare.com.
Yeah. So he's great for learning about hardware. But I think, robotics is very multidisciplinary in that you need to know mechanical engineering, physics, electrical engineering, software engineering. So to an extent, best way to learn is to get your hands dirty. I think that the most valuable thing I did, which is kind of what inspired me to design my own arm, is buy a SO 101, which is this 3D printed low cost arm. It costs like $200. You can buy it from a bunch of different stores. And there's a really good Python open source library called LaRobot by Hugging Face that helps you basically like calibrate, set up the robots, but then like actually train models on the robots. It's like a very powerful framework. I think it's starting to get to a point where it's being used by like more serious companies to train robot foundation models. So that's been like an amazing resource, I think, for a lot of people like me that are getting into robotics for the first time.
Makes sense. Well, thanks for the Rex, and thanks so much for coming on MTS.
Of course, yeah. Thanks for having me.
Absolutely. Banger review. But yeah.
It's actually ad review.
Remember when PewDiePie used to do like meme review? Do you remember this? Meme review. That was so good. Oh my god. Golden era of YouTube. Actually, PewDiePie is the PewDiePie of tech. Have you seen him like training a frontier model and stuff?
But he doesn't have much of an X presence, does he?
He does. Does he? Let's see. Is PewDiePie on X? You know who is on X? Neon. Scale your startup on Neon, the Postgres backend for apps and agents, built by Databricks. Neon.com/MTS. Oh, that's so funny. PewDiePie says he doesn't use Twitter. This account is just to prevent fake accounts. So his zero post account has 584,000 followers. And it's his old profile picture too. Okay, DMing PewDiePie. Oh, you can't. So sad. PewDiePie.
Yeah, but he like locked the fuck in, right?
Yeah, he lives in Japan now with his wife and kid. Very, very, very cute kid. And he has a dog. And
He's 36 years old.
yeah, and his wife is Italian, just like Kong, the AI connectivity platform. Connect APIs, LLMs, agents, and systems with serious security and governance. KongHQ.com.
Ain't no way I'm working in the next one. So I'll just say it. Blitzy, autonomous software development for enterprise code bases. Ship 5x faster. Blitzy.com.
Wow. I opened the PewDiePie account. The Twitter recommendations are Discord, Quackity, and Minecraft. Minecraft only has 7.9 million followers, and I don't follow them. Dude, this movie's going to be so bad. Minecraft is green. The logo is green. You know, another green logo is Granola. The AI notepad. Try it once and never go back. Granola.ai/MTS.
Yes, very smooth, very smooth.
Mm-hmm.
So who are some other like really famous Let's Players? Who are the most famous Let's Players?
The most famous Let's Players.
Yeah, in history.
Markiplier.
Markiplier and Jacksepticeye. Oh my gosh, yeah. Markiplier more like Mergiplier.
Oh my god.
Build once. Well, Minecraft is about building, so.
That's
Connect
true.
to every API tool in LLM. OpenAI, Dropbox, and Ramp use Merge to get AI to production faster. Merge.dev/MTS.
And if you're a Let's Player, you probably need to advertise. You should check out.
You probably want to do that quickly as well.
Yeah, you probably want to do that quickly. So you should check out our sponsor, AdQuick. Make your brand a billboard. Out-of-home advertising is easy to scale as digital. AdQuick.com.
Yes. Ads, you know, they have the capacity to reach a lot of people. Almost like they're large in scope.
You could say. You could almost say.
You could almost say it's a macroscope. AI code-based understanding for engineering leaders. Macroscope.com/MTS.
Yep, that's right. Well, it's been a great day, and we are signing off, and we'll be back with Gabriel.
It's time to give Australian people a voice.
It is.
Let their voice be heard.
Yeah.
Specifically, Gabriel, who we will have on shortly.
All right. Well, we'll see you back tomorrow, and you'll see Gabriel soon. Peace.
are back. Welcome, everyone, to MTS Live. You might notice I'm sounding a little husky. It's getting worse as I hadn't talked, obviously, to myself this morning. It's early here in Australia in the Melbourne office. And now that I'm hearing my own voice, I'm like, I sound old and infirm and kind of rickety. But rest assured, I'm feeling strong. I'm feeling powerful. Look, I will do my best. If my voice slowly trails off, I'll just start whispering romantically ASMR into the microphone. I have a fantastic guest for you this morning. Now, we are talking to Louis Anslow. Louis, you are I asked you before the show, how do I introduce you? You said the curator and founder of Pessimist's Archive. Now, if I can summarize, editorialize here, you correct me if I've got this wrong, Louis. Pessimist's Archive seems to me to be a wonderful collection of people in the past who were very concerned about technology, who were very pessimistic about new inventions, new technological directions, and were ultimately often proved rather wrong by the passage of history. Is that a good description, Louis? What have I missed?
Yeah, I'd say so, yeah. Like, it focuses on unfounded panics in the past, of which there are many. And when people are faced with change, generally driven by technology, like they act crazy and they stop thinking straight. It's not about don't question technology, don't worry about anything. It's like we're just so it's just so easy to worry about the wrong thing because there are so many. It's like a cocktail of cognitive biases come into play, especially when you're not a societal elite of various kinds. You generally, when change happens, power dynamics shift and people just, and there's things to learn. It's tempting to say it's different this time and we don't have anything to learn, but there's always something to learn. And so, yeah, that's generally the...
Yeah, and I just, obviously my view here is not necessarily the most relevant, but kind of the way I feel about it is, it's not necessarily the case that the current technological moment that we are in is exactly the same as all of the previous one. But I think it is almost 100% for sure that in 10 years or in 15 years or even in 2 or 3 years, we'll be able to look back at some of the concerns of the current moment the way we look back at some of the concerns that you explain on Pessimist's Archive. Now, there's a particular piece that you wrote that would be interesting to hear you kind of talk through. The title of the piece, Before Mythos, Satan, a 1990s software satanic panic. Do you want to take us through, kind of broad outlines of the story? And if folks are interested, they should read the full piece. It's fantastic. There's a bunch of historical clippings in there. It's a very good piece.
So obviously the Mythos stuff broke. Was it like a couple of months ago? It started
end of February, early April, I think was the yeah.
And it feels very unprecedented, like very weird. And then Jimmy Wales, the founder of Wikipedia, tweeted, "This is just like Satan," and I dug in a little bit and was like, "Oh my god." Like, wow. How did I miss this? Got to do a post, got to dig in, got to get the clippings, got to make it part of the archive. And so in 1995, there was a piece of software called Satan. I probably should have memorized the
impeccable branding.
So it was an acronym for Security Administrator Tool for Analyzing Networks. And it was a troll, basically, by the creators, one of them being Dan Farmer. It was basically designed to get attention and scare people deliberately. And so everyone kind of freaked out and the press went crazy. And it was like, because it automatically found network security exploits on their then nascent internet, right? It would sniff around websites and look for these.
It's kind of an early fuzzer or something like that, wasn't it?
Yeah, and it would work within Netscape, right? So it had this really easy to use interface. So a lot of the reporting was like, anyone could use it. Like your grandma could use it. Like this is democratizing hacking. And the creators announced they were just going to release it openly, no restrictions, free, open source, whatever. Then I'm trying to remember the number of people on the internet in 95. I think it was like 10.
6.
between 10 and 20 million. I don't know. It was it wasn't an insignificant number. And so they announced they were going to release it for free, and that meant, global distribution essentially instantly to anyone who had an internet connection to any nation on earth, including, enemies of, the US and the West and stuff. And people were just like, no, like what? Like, so, and it feels like we're like, this feels very unprecedented, but that was the first time it was possible for, a dual use piece of software that could be used offensively and defensively could be distributed instantly like across the world really quickly. So this is the interesting thing about the piece. And at the time, encryption was still under export controls in the US, which is a funny full circle, right? Like, and we had that fight, and the cypherpunks won, and encryption is free and open source, and there are no export controls going on there. And so at the time, that was the precedent. The government could suppress and control software and put export controls and treat it like a weapon. And so that's why when they announced this, everyone was like, "What? Like this is not." This is breaking a kind of a rule we've agreed on,
that makes perfect sense. And it's quite interesting. Like, I've had a few conversations with people involved in the cybersecurity scene. There's a kind of culture around the cybersecurity scene, which is very interesting. And there's still a kind of cultural memory, I think, of that early cypherpunk period, in which there was this ideological, it was kind of a very strong ideological belief within much of the cybersecurity scene that you really ought to just release this stuff and let chaos reign. And I think, some of their arguments are much more convincing in retrospect than maybe people found them at the time. I think there's a good case, right, that, in some senses, allowing access to this technology does itself build a certain resilience into the system that is not present when you have this kind of centralized control that maybe the governments by nature might tend towards. So it might be drawing too obvious a connection here, Louis. But tell me, what do you think? You wrote this piece, you spent some time in the archives, right? Having done that, what are your reflections on Mythos, on this current controversy about Fable 5? What are you thinking there?
But it's funny because it's not quite the same, because they were never going to release Mythos, right? Like Mythos was going to stay locked down.
Right.
And then
Anthropic themselves did the safeguarding. They did
right. So they were never just going to throw it out there like cyber anarchy, whatever, like in this instance. So it kind of makes the reaction seem sort of a bit ridiculous, because the reaction is they've locked down the version that's got the safeguards in or whatever.
Right.
So it's not quite the same situation, but it's almost like they tried to find a reasonable middle ground, and they're still, still under export controls. So I'd also say in this sort of like this piece in '95, it was like there was just a real like the people just overestimate the number of motivated bad actors, right?
Yeah. 100%.
Generally, I think the same with deepfakes. Like it's coming up to a decade of the deepfake panic.
Yeah.
And there's just not much there. And like every time the models improve, it's like, this is it, it's over. But like there's just a surprisingly few bad actors.
Yeah. And you don't want to rely. You don't want to have a policy space that relies on just like everyone being nice, right? But at the same time, I think it's worth noting that like you're right. Like the system is more resilient than you might expect. People adapt much faster to these kind of new information climates. Louis, in the aftermath of the Satan panic in 1995, in any other kind of these cybersecurity incidents that you've read about, did you see, were there instances in which there were kind of downstream bad effects from public availability of this kind of software, of these capabilities?
Yeah, in terms of software, that's a good question. Not really. There's debate around like whether Saddam Hussein should have been able to import PS2s as much as he likes, right? Which was a thing. There were accusations that people were buying up PS2s to take to Iraq to build weapons.
Yeah.
So I don't know. Maybe Saddam did that. And obviously, computers unlock all these incredible things, abilities, and to build stuff that wasn't possible. So I don't have an answer, but I think in software, just software alone, I don't think so. You know, I mean, encryption. Yeah. But encryption has, I mean, bad people use encryption to do bad things. Yeah. It's not like have the negative. It's like what's the in aggregate, what's
the cost and benefits?
So there's damage has been done.
Yeah, and there's the same tension is very clear in when you speak to people from the world of cybersecurity. You know, Satan was a cybersecurity, product in a sense, a piece of software. And when you talk to people from the cybersecurity field, they say, well, there are instances in which public disclosure of bugs has led to, cyber attacks using those bugs. It's not zero cost, but it does seem to me, as I think this fantastic example you've pulled together here illustrates, that often the exact shape of the concerns doesn't quite align with the shape of the costs when they eventuate.
Yeah, true. And again, with the Satan thing, it was like, let the world patch their systems, right? There are probably more good people wanting to patch their systems than there are bad people trying to break into them. So like, don't suppress that, right? That was the general way. So yeah, I urge people to read it. There are interesting lessons to learn. It's an interesting analogy in some ways, in other ways it's not. And I'd love.
This is a great piece of kind of historical research. I really enjoyed it, Louis. Thank you so much for coming on the show. So people can find you, Louis Anslow, on x.com, and they can find the Pessimist Archive on Substack. You should check it out because it's a very MTS aligned story. It's very interesting. And there's the archive is quite deep. You have quite a lot on there, Louis, that's worth digging into. Thank you again for coming on the show.
Thanks for having me.
Any other final kind of suggestions of where people should find you or what they should look at if they...
People should just check the... it's blurring it out. Look at that AI.
Oh, no. What we'll do is I'll post some screenshots when we share this clip.
There you go. Yeah, cool. No, some really fun ones. It's good to see the hysteria all laid out as screenshots. So
there's some great clips from the newspapers themselves of people just freaking out about this stuff in a way that feels a little bit too familiar. Well, thank you so much, Louis, for coming on the show. A real pleasure. We might have to get you back to talk about some other stuff in more detail. We'll say goodbye for now, and people should find you on X and find you on Pessimist Archive.
Thank you.
Thanks. welcome back, everybody. My voice not improving, but we have another fantastic guest. We've got Jordan Schachtel joining us, the Chief Policy Advisor for the Innovation Council, but also the publisher of the dossier, a journalist with some background. I think, Jordan, welcome to the show, mate. Great to have you.
Yeah, thanks for having me. Appreciate coming on the show again.
Now, we were talking before. Jordan is based in Florida. I'm based in Australia. There's a kind of cultural, maybe not so much where I am in Melbourne, but Queensland and Florida in my mind are basically the same place. That's maybe a small TAM joke for this show, but it's great to have you on the show. Now, the reason we've got you on, the kind of the energizing incident in this particular case, is that there's some very interesting politics around data centers. There's a kind of general anti-AI populism that's taking root, and it has a kind of horseshoe feeling to it. There was, I'm drawing a blank on his name right now. There was a comedian yesterday I saw going around, a clip from a comedian's podcast. Theo Von is exactly who I'm thinking of. I can't believe I blanked that. Very funny guy going around on X, where he was kind of just like, data centers are bad, dude, or whatever, And of course, there's resistance on the left as well. There's AOC holding up muddy water in congressional testimony. But do you want to tell us what's happened in the last few days? What's the story here, Jordan?
Well, I appreciate that you call them data centers. I like to call them data centers too, but in the US, more people call them data centers. So I've been told I have to say data centers, not data centers. But
excuse me.
I'll put that aside for maybe it's like a British, Australian, South African pronunciation, and I'm happy to go with data centers if everyone agrees. So I've been tracking for quite a bit this like kind of like AstroTurf movement. Part of my work involves a lot of stuff in Washington, D.C., and there's a lot of activism and lobbying in Washington, D.C.'s capital of the United States. And people are spending tens of millions, hundreds of millions, maybe billions of dollars now trying to get the AI policy that they want because, the most powerful interests in the AI space are worth a lot of money now. There's multiple companies that are worth over $1 trillion on paper. So they are deploying lobbyists, activists, AstroTurf organizations. An AstroTurf organization is basically like a fake grassroots organization that pretends to be something, but it's really just, funded to deploy a political agenda. And I've been discovering that a lot of the AstroTurfing is happening with a lot of these upstart groups, and particularly ones that are trying to sway the Trump administration, with so-called conservative or Republican adjacent politics. And then you find out that like, hey, these like couple of these organizations are actually, based in San Francisco and were founded by, pause and stop AI people. So it kind of makes you, pause for a second and think,
right.
What's going on with everyone's agendas here? There's some high profile right of center commentators that I'm seeing on social media who are suddenly deploying similar talking points and then having like a little media operation. So we always have to be as aware as possible of the legitimacy of some of these organizations. There's an organization that is called Humans First that has made some news.
Now, I might pause you there, Jordan, because I want to get to Humans First. But I thought just listening to you talk just now, it kind of raised a question for me, which is when I think about the idea, astroturfing seems to be an accusation that gets flung around more often than it seems to be validated. The most boring examples are like, you're on Reddit looking for a consumer good, and you're like, oh, I'm trying to buy a fridge. What fridge should I get? And there's like an extremely unsubtle account that's called like, George 12345. And every single one of his posts is, I love my LG fridge. And it's like, okay, well, that's pretty obvious astroturfing. There's a lot of accusations that get thrown around in politics, obviously, because it's very convenient to undermine the legitimacy of, the earnestness of opposing side's political view. But can you tell me more generally, like, talk to me about astroturfing in politics, where you see it in DC. Is this something that is not just confined to data centers? It's just a kind of just general part of dirty political tricks?
It's got, I assume, I'm not an expert at
Hmm.
manipulation, but it seems that it's a very clever tactic that works time and again. And very wealthy and influential people and organizations are deploying AstroTurf organizations, on both sides of the political debate. The
Hmm.
problem is, the downside is if you get caught running an AstroTurf op, then you look really bad. And that's kind of the case with this human source organization, which I, documented in the dossier. But there's
Yeah.
plenty of other organizations. You're right. It's not confined to one political space. It's kind of like a gray art, not necessarily like a dark art
Yeah.
operation. You can question the moral legitimacy of it, but it's constantly happening in Washington. Sometimes you don't want, like, if you want to have uh, some kind of public facing effort, you don't necessarily want it to be, like sponsored by Google all the time, right? You want, like, if Google
Right.
wants to
Right.
do something, maybe they'll just like have, one of their trusty congressmen fighting for their agenda. So there's a lot of gray area, but it's kind of how Washington works, and the best, the people that understand Washington the most have to navigate around that and realize that it's a reality that we're going to continue to deal with. But sunlight is the best way to expose it, to disinfect it, and to kind of even out the
100%.
playing field. Because if we're debating these issues like data centers, we want to deal with people who, are genuinely interested in solving problems and, convincing people to make the case for them. The problem with AstroTurf is it's not so legitimate, and they're just trying to deploy propaganda to trick people into doing things.
Yeah, 100%. That makes perfect sense. So tell me about the case of humanity first. What did you find? What's going on here? And, how's the story unfolded?
So it started a few months ago. There was a group called Humans First. They initially started as a bipartisan organization, to fight the data center agenda, really just anti-innovation,
Hmm.
anti-AI, very skeptical, promoting the doomer narrative that everyone's going to lose their jobs. So it didn't really make any sense because they're like this. At one side, they're saying that this thing's a giant hoax. The other side, they're saying it's going to take everyone's jobs. But the point is basically just to, promote legislation and to like stop the building of American technological infrastructure.
Hmm.
So they created this group called Humans First. They did all these town halls across the United States. Obviously, a lot of money was behind it. They hired right-wing publicists, political operatives. And I wrote a piece in the dossier maybe like a couple months ago where I showed through their articles of incorporation that they were incorporated by the founders of the Center for AI Safety, which is a group based in San Francisco. Definitely not right wing, more like effective altruist aligned.
Yeah, yeah, yeah.
So very much disconnected from, conservative politics. After my expose, for whatever reason, they doubled down and decided that, hey, we're no longer a bipartisan group. Our left-wing branch is breaking off. Now we're a conservative organization, but oh, by the way, we're still against data centers. And now what they're doing is they're trying to set up, I think in July at some point, a nationwide protests against these data centers and to rile up people with what I think is largely false information,
Hmm.
claiming to, support, freedom and conservative values and all this stuff. And I know that the people that actually created the organization are totally misaligned with anything involving, traditional conservatism in the United States. So
Right, right,
it's
right,
definitely
right.
a fraudulent operation, in my view.
Yeah, hence the kind of astroturf vibe around the whole thing. So, kind of take me through it. Like, if someone is just hearing about this story for the first time, what types of actions was Human First doing? How is it trying to align itself with kind of conservative politics, with maybe the Trump MAGA faction, and how do their actions in that space compare to what you might assume about the views of the founders?
So that, it's a very professional operation, you can
Hmm.
tell, and I'm sure that there's some sophisticated operatives behind it. The public facing individuals have conservative credentials,
Hmm.
but they're not necessarily up to speed on the intricacies of AI technology, So I think that they're like happily ignorant and happy just to kind of like put the blinders on
Right.
and pursue this particular agenda. I mean, in the United States as a whole, the anti-data center propaganda is so out of control
Yeah.
that when you actually see some of these public opinion surveys, you find that the public is becoming wildly misinformed by all this propaganda. They think that all the water is going to disappear, our electricity rates are going, to bankrupt us, and that, they're emitting sound that is like hurting the children. And it's just like one piece of nonsense after another, but it's like
Yeah.
they're just like throwing everything at the wall, seeing what sticks. And there's
then
like
doubling
20
down.
different pieces of propaganda. Humans First, they have like a bulletin list of all of the stuff that the data centers are bad. And one of the things that they actually listed there, you can check it on their website, is that you shouldn't live near one and it shouldn't be near you because they're potential military targets and that a foreign army might bomb them. So you really shouldn't build them in your community. So, and what's funny is that I know that they're also using Claude to set up these websites. So, which is, impossible to run without data centers. So it's just like
beautiful. It all reads like Claude style. And so, like, I just want to dig in here just for one more second, Jordan, and just like understand what are the kind of right-wing populist anti-AI talking points. You mentioned one of them there. Don't build a data center near your house because it might be a military target. That's kind of like it's kind of playing on like this paranoid right-wing kind of prepper mindset of like, don't live in a major urban area. It'll be cut off during the war. What else are there? What else kind of lines are they running? Are they similar to the kind of left-wing lines around water use and energy use, but just with like a bit of right-wing gloss on top?
So, in the context of the recent, major propagandizing events of the last decade, we had this like COVID hysteria thing that drove everyone crazy. And that's what I'm kind of seeing with this anti-data center activism. It's just everything is wrong. We need to like panic. We need to demand that our legislators make sure that there are zero hyperscaler data centers in our state because they're poisoning the wells, the water's brown. So it's not necessarily like I'd say they're appealing a little bit to conservatives, but it's more so just the branding. I think that they're using the same language when they appeal to the left.
Right. And it's just a kind of like, it strikes me some of the things I've seen floating around, like the Theo Von video and just kind of what you see on the corners of Facebook with your aunt or whatever.
But if you notice what Theo said, Theo was basically just like, he didn't really like, it was just kind of his instinct on the issue.
Yeah, it's just his vibe, right? It's just his vibe. But the way that they talk about it, as soon as it enters one area of political polarization, it just picks up all the language associated with it. It becomes kind of part of the monocaurs of the populist left or the populist right. So it's like, on the populist left, it's like it's drinking all the water, it's not sustainable, it's gonna heat the planet up and cook us all. But then you kind of see on the populist right this kind of some of this kind of RFK health horseshoe theory stuff about like the vibrations from the data center are going to make us all gay and trans, and then there's this like environmental preservation, but it's like more of like a Teddy Roosevelt than like AOC. It's not like it's cooking the planet because global warming. It's like it's destroying our beautiful native rivers and forests that we need to preserve for the next generation of American children. Like it's kind of interesting to see how these same talking points get a little political massage and suddenly come out as like a MAGA talking point or what have you.
I agree. And like, are we going to reindustrialize America or are we not? Because if we're not, then like we have to rely upon China for everything. But like when people talk about building American infrastructure in our rural and urban communities, like this is what it looks like in 2026. So if people look at that and say, oh, I don't support that, it's like, okay, so let's have a conversation about what it looks like being reliant upon China for AI, for technology, for hardware, and like let's have that conversation. I don't think people would support that too much.
I mean, it seems you're absolutely right, and the problem for me is as soon as you start getting to trying to unpick the logical inconsistencies in these positions, it's like you're just like, what's the Bannon phrase? Like, they are flooding the zone, and you cannot bail out the zone with the bucket of like, oh no, but China or whatever. It seems to me that it's just like you kind of just have to, I don't know, accept this populist view and try and engage with it in a way that is like not sneering, not elitist, but also just like doesn't take it too seriously. I don't know how, genuinely, if someone just put me in charge of doing this, I'm not sure what the best approach is, but I hope I hope we've got some strong minds on it, because it seems like a pressing problem, Jordan.
I agree. It's a struggle.
Yeah.
You know, when someone gives you the 20-piece laundry list of why data centers are horrible and, you know, destroying America, like how much time do you want to take to dissect every little issue? And you're right, that is the strategy, is just flooding the zone, making it impossible to have a rational conversation over data centers. And as I kind of mentioned earlier, like the polling's not going in the direction of the pro-innovation people. So we had to figure out a way at least to impact the conversation with legislators and with, you know, big time state representatives, governors, and have this rational conversation. And I think that the public will eventually agree. Like, you don't have to love data centers. Like, I don't think anyone loves, you know, when a new 5G AT&T tower goes up, you know, half a mile from their house and it's like ugly and everything. It's like, but hey, my cell phone reception is better. And you know, there's one of the biggest struggles of the data center debate is that the benefits tend not to be so local, right? So it's like a huge NIMBY issue, but we realize that like America broadly needs these things, right? So I understand the NIMBY problem, but it's also, you know, from a countrywide perspective, and I know you're based in Australia, but I guess from a pro-Western perspective, we need these things to, you know, maintain our sovereignty in 2026.
Yeah, and you know, this show, we've got a very strong focus on the US, and I think that makes perfect sense. I think you're right though. The benefits of data centers, of the AI infrastructure build out more generally, you know, some of them are local. You get more jobs. If you're a plumber, your wage probably goes up a little bit. But many of them, in the way that say a 5G tower is not, many of them are much more dispersed. It's like, okay, well, they build a great data center in Abilene, Texas, and now they're releasing a better model that I can use in Melbourne. That's maybe less interesting to the people of Abilene, Texas. They're not benefiting, you know, any more or disproportionately than I am. I want to just turn this conversation very quickly, Jordan, to the question of, you know, what the aftermath was of your reporting, whether you think what appears to be some astroturfing here is going to hurt this particular case or not.
Yes. So the main funders of these astroturf organizations that are based out of San Francisco tend to be EA, effective altruism aligned philanthropies, mostly funded by Dustin Moskowitz and his wife Carrie Tuna, who have billions of dollars in Anthropic stock that they just like threw at these organizations. So I assume that we're just going to have an endless onslaught of these, you know, pop-up organizations. They get exposed, maybe they disappear, maybe they double down. And as you know about DC, there's a lot of guns for hire. So we just need to, you know, maintain, you know, our heads on a swivel, keep the situational awareness up. If something smells funky, it's worth investigating. But you know, there's a lot of ideologues involved in this conversation. Some of the ideologues, you know, sit on the boards of the frontier model companies, right? So, but I think that the Trump administration is doing a great job, for the most part, taking like a hands-off approach to like clamping down on AI innovation, technological innovation. So, you know, I'm very optimistic about what the Trump administration is doing and what their partners are doing. And, you know, most of, you know, these frontier companies and like these big data technology companies, you know, are really leading the fight for American sovereignty. You know, we have this big AI war now with China, and I think it's really important that the United States' model wins. I don't want to live under, you know, a totalitarian AI system where, you know, you're not allowed to like question things, or, you know, certain government narratives are off limits. I think that would be horrible to live in a society like that. So it's important to, you know, support American companies are doing great work on this front.
Yeah, look, I think I broadly agree. I think I think it seems to me that the AI story so far has been a great one. I think there are some risks to the continued progress of this technology, but there have been with every other technology. I think we can manage those safely without, cooking up a bunch of AstroTurf scare campaigns to stop people building data centers. It'll be interesting to follow this story. I expect it's only going to gain in political prominence. I think it's probably going to start, being a critical issue in various local and then state and maybe eventually federal elections, political races, and my own personal feeling, perhaps naive, coming all the way from Australia, Jordan, is that kind of the best, the only way to deal with this is to call out this kind of bad behavior when you see it and to try and keep your own hands clean. There was some reporting a few weeks back of an AI kind of, maybe it was a PAC or it was an organization of some kind, a think tank or a lobby group that I think it was pro AI. I might be getting the details wrong here, but it had two sock puppet accounts that were like arguing in its replies or something. And I just thought, God, this is the last thing we need. It's just like, just keep your hands clean. The case is quite a strong one, and maintain some of the moral high ground here by being principled. Maybe that's silly of me, Jordan.
Yeah, having lived in Washington, D.C. for quite some time, the moral high ground tends to, it's hard to find in a lot.
It sinks into the swamp. So. It sinks into the swamp over there in D.C. Well, look, thank you so much for coming on the show, Jordan Schachtel, and very interesting reporting on this particular case. Do you feel like this story is finished here, or is it one to follow over the coming weeks?
It's certainly worth following. They're going to do these data center protests, and I encourage people to, who are peacefully interested in attending, to ask the organizers where their funding comes from, point to their articles of incorporation from, these San Francisco organizations, and ask them, like, what is in it for you guys to start this so-called conservative group, or do you just want to shut down data centers with this right-wing window dressing? I'd be interested to hear their answers, and I'd love to have them come on this show and explain it to you. I think that'd be great.
100%. Yeah. Look, human first. If you want to come on and and talk about it, we'd love to have you on the show, Jordan. Thank you so much for coming on. It's been a real pleasure. Great conversation. Where can people find you?
Yeah, so you can find me at the Dossier on Substack, or just at Jordan Schachtel on X, where I spend too much time on there, but I really appreciate it. Thanks for having me on.
Relatable. Very relatable, Jordan. All right, well, you heard the man. Find him on X, find him on Substack. Great conversation. I imagine we'll talk again. Jordan, thank you so much.
Thanks.
Farewell, and we will be right back, folks. welcome back, everyone. It is so good to be here, back on MTS Live. It has been a jam-packed morning this morning. I feel like I'm chasing my own tail. I can barely hear my voice. It's fading into obscurity. The world just keeps going when you're not watching. It's a real problem. I have another fantastic guest joining me this afternoon, PT time. I have Emmett Penny joining me here. Emmett, you're a senior fellow at the Foundation for American Innovation, and your focus there is energy and infrastructure. We've got you on the show today to talk about nuclear power, which is very, very exciting. A field that has suddenly, after a kind of decades of senescence, started to come back in quite a big way. Why don't you, well, first of all, welcome to the show. It's very good to have you.
Yeah, happy to be here. Thank you so much.
I was just saying before we went live that my show is starting to feel a little bit like the FAI show because I had Joshua on the other day to talk quantum. I've got you on now to talk nuclear power. But the problem is you just keep putting out such good stuff that we have to keep talking about it. So why don't you take us through, well, maybe we should start with what is happening in this space that makes it worth talking about right now?
Yeah, so there are a few things that are happening. One is the presidency of Donald Trump, which is the most consequential presidency for nuclear power since Eisenhower was in office and gave his Atoms for Peace speech. The 4 EOs that Trump put out that covered different facets of the nuclear industry were a major catalytic. Now, there was bipartisan congressional work that happened before that. So that just shows what a unique moment we're in, that, everything else aside, both sides seem to agree that this is where we need to go as a country, is cultivating the atom. But none of this would be possible without sort of the oomph that the administration gave, the marching orders to get things right on everything from regulation to financing. And we have seen just in the last 2 weeks a round of victories across those domains.
Yeah, fantastic. It's a great way of putting it. And it made me come as a bit of a surprise to me as an outsider, as someone sitting here in Melbourne, Australia, but who follows US politics quite closely. The first Trump administration was perhaps not known for its single-minded policy focus. But the second one, on a range of issues, on quantum, on nuclear power, on several other kind of cutting-edge frontier technologies, AI, of course. It's been quite focused and disciplined in advancing an agenda here, and not in like a kind of creepy advancing an agenda way, but just in a kind of making progress, directing the organs of government, getting processes moving. Talk to us about the fruits of that process. Excuse me.
Yeah, absolutely. So look, I mean, it's an old saw in Washington that, personnel is policy. I think we'd be remiss here if we didn't point out the incredible leadership of Secretary Chris Wright over at DOE and then Chairman Honey over at the Nuclear Regulatory Commission and their various teams. They're leading the charge. They're getting this stuff done. So that's part of why this is all happening. So what does the fruits of this labor look like? We'll start with the news today, right? So the DOE, most people don't know, has a bank called the Energy Dominance Financing Office. And its job isn't to be like, a disruptive investor or anything like that. Its job is to step in to the gaps where the market can't solve the issue, right? So they provide long-term, low-interest loans on difficult infrastructure projects that need to get built. Now, nuclear has a track record of being exactly that kind of infrastructure project. Now, we're in a better place than we were. We've built 2 recent reactors, both of them AP1000s in Georgia, Vogtle Units 3 and 4. Southern, the utility that, built those reactors, ate all sorts of externalities. The design was not as finished as they thought. COVID happened while they were doing it. Westinghouse went bankrupt at one point. Fukushima happened, which added a year and a half to the design review without changing anything in the design, right? And that's what led to it going, billions in years over budget. However, they were rebuilding the nuclear industry from nothing. It had completely atrophied, right? These were the first reactors we built in half a century. That's how long it had been. So where does that leave the Energy Dominance Financing Office. Well, Trump, in his Reinvigorating the Nuclear Industrial Base EO about a year and some change ago, called for the EDF to step in and figure out how to finance 10 gigawatts of exactly the type of reactor that the AP1000 is, right? So now the EDF has announced that it has 17.5 billions in loans to work with utilities and Westinghouse for long lead items. This is like really complex turbines, big containment vessels, things like that, the things that take the longest to procure. And they're greasing the skids and de-risking the next build out. So it's going to be 5 different projects for 2 reactors. That's going to be 10 total, and that'll be the 10 gigawatts that Trump asked for exactly. And that's just today's news, right?
Yeah. It's very impressive. I have long been a skeptic of industrial policy as a general posture, right? I kind of feel like governments do not have a great track record outside of a few very specific instances of kind of picking winners in these spaces. But I have been very impressed both with some elements of the CHIPS Act under Biden, some of the energy transition stuff under Biden, and some of this nuclear stuff under Trump, where it seems to me that part of what is happening is the risk capital from the government is just giving everyone permission. It's just sending a very strong signal that in an industry where so much of the blockers are just like downstream of government policy and government decision making, that these things send such a big signal, not just because there's money involved, but also because it implies a kind of more general emotional, spiritual support from the administration, from the government behind, in this case, nuclear energy. And that seems to be as important. It's the costly signal, which is as important as the money itself. It's very interesting to see. So we've had this big announcement this morning, but we've also had over the last 6 months a series of milestones being met by relatively small nuclear startups. A lot of them are focused on small or modular, or even I think in Radiant's case, a kind of micro reactor. Talk to us about, how do we, from the outside, how do you interpret those milestones? What do they mean? And every time I see Valar posting on Twitter, or every time I see Radiant posting on Twitter, what should I take from this about real tangible progress towards nuclear power in a range of different formats?
Yeah, that's a great question. So I think one thing, there's like a flood of good news. It's almost hard to keep up, right? And I think that's one of the things that's so exciting right now. Valor going critical recently. I think before the deadline they'd set is very, very exciting. Antares doing the same. I think there will be another in the pilot program very, very soon announcing criticality. The deal with Radiant is very excited. I think what we need to see right now is that this is the beginning of the nuclear future, right? And the administration has made the right bet. It's a 2-track bet, right? So we're doing these long lead items for existing reactors that we already know how to build that will guarantee that these supply chains remain intact. That's going to be a great tailwind for everyone doing something innovative right now, like the Valors of the world, et cetera, et cetera. At the same time, things like the DOE pilot program is creating a new pathway, and they're working with the NRC to create a bridge from those demonstrations to feeding the information from those demonstrations into the licensing process for the NRC, right? So we have a whole of government moving forward on this, which is exactly how it's supposed to be. And I think what's important about these pilot demonstrations is that and maybe this isn't something that people would take from it as the most important thing, but I find it almost spiritually important. I think just the comms rolling out of these companies that are showing Americans what it's like to build and build fast again cannot be like overpriced. I think that is really, really important. It's welcoming people in. It's showing them what it's like to do this. It's inspiring them at times of low morale, which, I think over the period of my life in the US, there have been definite downswings of that. This is really, really morally restorative, in my opinion. And then I would say, we want our licensing regime for new reactors. In other words, saying, stamp, we can run this reactor commercially, to have more real world empirical data in them than just paper, right? So
Yeah.
I think we're seeing this innovative approach that is going to reshape how we do nuclear, that makes it safer and faster, which is something that people years ago would tell you was a trade-off. It is not. That is a
Yeah.
false dichotomy. And so I
Yeah.
think we're seeing just this all around unity of purpose and a sense of haste that has been absent from both government and industry. And it's really inspiring to watch all of this happen.
Yeah, very well said. That is the experience that I, as a kind of novice, get kind of through the screen. But it's good to hear it confirmed by someone who is following it so closely. Maybe an unfair and more general question for you, Emmett. It seems to me, if you step back and look at this as just a kind of template for statecraft, you've had the approach is focused on, and I'm going to oversimplify here, but it's kind of focused across the supply chain. So you have kind of, and I'm going to get the details wrong here, feel free to correct me, there is a program to support the purchase of a domestically manufactured fuel that's supporting companies like General Matter to build out the supply chain from the fuel perspective. You have the pilot program that's creating a kind of particular regulatory regime to allow some innovation in the design of the nuclear reactors. That seems to be bearing fruit. There is the longer run finance for more established types of reactors, like you were talking about earlier, that just announced today with Westinghouse. So, how should we think about this as a package of approaches that you could use as statecraft to take any sector or industry that is critical to the US and use government support to advance it effectively?
Yeah, I think that's a really interesting question. I don't know if I have a stock answer. So what I'm going to say is I think it's important for anybody who sees this as a template to try to separate out first what sets nuclear apart from other industries. And then maybe that'll give us a good idea of what's left afterwards. So we have a legacy industry that is very, very unique. Nuclear was innovated as first as a weapon, then as energy by the government entirely, lock, stock, and barrel. That is very, very rare in the history of America, especially, right? So it had its own demands. It came of age in the American golden period of industrialization and aggressive government spending and experimentation. Almost every reactor that's being attempted right now has its antecedents in the 50s and 60s when we were trying to pioneer this technology for civilian uses. And that's not a knock on anybody developing those. It is good that we are not letting those riches go to waste, right? That's what I want to point out there. And it also is in a necessary economic sector, the grid, where this is going to play out, that has been underinvested in for decades, that has also had flat demand for its main product for decades. And all of a sudden, that has completely changed.
Yeah.
Right? So when I take a look at this, this seems like a very unique package of things, right? There's institutional memory in the government for what to do here. It has national labs that are built to experiment with it. It has financing offices that have been thinking about it for a long, long time. I don't know if this is replicable, except for maybe some bare bones tracking, right? Which is, how do we emphasize what we're already strong at, or where we've already developed something that we don't want to let go. So that way we can leverage that to help something that's new and innovative, while at the same time taking a look at the geopolitical situation and saying, what are going to be the sensitivities, the vulnerabilities later on? That is a general schema, seems to me like really clever future casting on what's going on with nuclear that could probably be used. But as for the specifics, this feels pretty bespoke to a very unique industry.
Yeah, that's a really good point, and one that I kind of underappreciated in the question. I think you can kind of imagine like a vague connection to something like, the semiconductor industry, where you go, this is something that has deep roots in the government going back to the same era as nuclear. It's something where there's a clear and increasing national security case. But I take your point, and especially around, the expertise and the institutions that have already been built within government. I think that's a really good point. I want to switch gears here for a second. I think that nuclear story is like super exciting, really interesting. You also focus on energy more broadly. You mentioned just now the kind of the demand side of like, we need the nuclear for the power, as well as because it's sick as hell. So like, take us through at a very high level, what is the, if this is possible to do, what is the national energy story in the United States right now?
Chaos. That's the national energy story, right? I mean, don't get me wrong. America is an energy powerhouse. It's not like people aren't doing good things. It's not like we have incompetent people running these institutions. We don't. We are very, very blessed with an incredible natural gas industry, with a reliable electricity system. Those are both really tightly coupled. However, we were on a trajectory where we were only investing in intermittent technologies in specific areas, and we were undervaluing things that were reliable and could provide baseload. Now, that seemed fine to people so long as demand for power stayed flat. Unfortunately, those same people wanted to electrify everything. So one way or another, we were going to see demand increase. Right. And we were going to see real industry responses to what that looks like. And what does that look like? For the near and medium term, that looks like natural gas and natural gas turbines, right? And we will definitely keep building renewables, especially solar. Texas is an absolute powerhouse right now and putting that out. That's not going to stop. But the main story for durable, reliable power is natural gas right now. However, that comes at a cost. And the cost is, as I mentioned earlier, when you tightly couple the gas system and the power system, it means that the price of power becomes really, really sensitive to the price of gas. So failures or fluctuation in one can spill over into another, and that can be major headaches for advanced manufacturers that need things to be like very steady, et cetera, et cetera. That is where this like medium to longer term bet with nuclear comes in. Right. It gives you the baseload power. It gives you that 24/7 reliability. This is part of the story that we're seeing emerge now, and it's emerging in response to a very real demand signal for increased compute in what is a global race for supremacy. The stakes could not be higher to get this right.
Yeah, and that's a really great way of putting it. The the electrification story, the green energy story. It was a kind of long-running one that felt like maybe it lacked a little bit of urgency for for a bunch of different reasons. The technology, just had a technology tree to climb, and it took us a while to get to reliable electric cars, make enough batteries, all those kind of things. The grid needs much more investment before it seems to me certainly in Australia. I imagine the same is true in the US. Before electrification can become a reality, and then it kind of out of nowhere you have this explosive story of data center energy demand, on top of what was already a kind of generational transition towards electrification. So it's just like, it hasn't rained, but it's poured.
Yes, yeah, absolutely. I mean, this is when things really matter. When we were in the era of like just doing climate planning and things like that, things were very detethered from reality. Billions of dollars have been spent procuring batteries to stabilize California's grid. And the storage of those batteries is equal to, I think, about a single liquefied natural gas terminal in New England, right? So like these are sort of the mismatches that we were seeing. What the demand signal has done is like immediately started to discipline everyone's thinking, right? To the raw physics and economics of what's happening on the grid. And that's going to be a painful transition for institutions that were thinking of this purely in terms of their pet technologies and their pet anxieties. Now there's a whole new geopolitical raw race for power in both senses of the word happening here. And there's a mismatch of positions in China. We have the best models, but we struggle to build stuff. They've built a ton of stuff. They are falling way behind us in models. However, that gap is real and felt within the industry.
Yeah, 100%. And there's going to be, I'm not a doomer about this. I don't necessarily see the race between the US and China as a kind of hostile one, although there are elements of competition there. But there's going to be a point at which, the model capabilities are good enough for a bunch of different stuff. And the question is simply going to be how widely can you deploy them? And it's not going to be enough to have, like Fable 7 being the world's best model, because you won't need the world's best model. You'll just need a lot of compute, a lot of inference running all the time to power all of the different sectors that are going to benefit from the technology. So it seems one in which, you can't look at the landscape right now and feel like there's nothing to worry about, because the dynamics of it are going to change as the capabilities change. The dynamics of, whether the advantage is coming from the frontier model or simply having sufficient inference, I think, it may well change. It's hard to say from this vantage point.
And to bring that back to nuclear, that's what I think is really important about what's going on here. One thing that we haven't touched on is that the Nuclear Regulatory Commission is rolling out all sorts of reforms to how it approaches things. It's going to touch the entire nuclear life cycle. Now, these are ideas that have existed for a while over at that agency, but only because of the EOs and only because of Chairman Nee's leadership are they, getting vent to actual change. And that's going to reduce deployment timelines by a lot. It's going to make it easier for nuclear startups to finance what they're doing because now they have an idea of when their reactor is going to get licensed, and things like that. It's going to bring a lot of sanity to what we're seeing in this. And it's going to be hugely important for America's energy future. I refer to nuclear power plants as industrial cathedrals. What we need to see these as is civilization building infrastructure, right? Just like around Notre Dame, you had all of the artisans, generation after generation, that went into building and maintaining that. Around nuclear power plants, you have jobs that don't necessarily need a degree, but pay very, very well and can be handed down generation to generation. Wherever you find a nuclear power plant, you will find a community that loves it. You'll find a durable, healthy tax base. You'll find good schools. You'll find robust civil society networks. And we know that those don't last when you rip the plants out. We've seen plant closures in America, and it's like when any sort of factory leaves town. That's when the drugs move in. That's when the tax base collapses. And it's a doom spiral for those towns. That's a choice. And we aren't making that choice today. We're making the positive one to build more industrial cathedrals.
I mean, I'm convinced, mate. I'm convinced. I think, I think we're moving to a world of Simpsons, a Simpsons utopia. Homer and Marge.
No, it's okay. So I'm glad you
house.
brought that up. No, this is a point my colleague and friend Maddie Hilly brings up, that the only thing the Simpsons got right about nuclear was that Homer could support his family on a single income. Right? He could own the house, have several kids. His wife didn't have to work.
2 cars, a dog.
Yeah, in the garage.
Yeah.
Yes, exactly.
Yeah. There's always a beer in the fridge. Look, I think that's a nice note to end on, Emmett. I'm going to ask you kind of one final question, but I'm very interested to hear. Please, if there's anything you think is particularly interesting, feel free to share it with the audience. People can find you on Twitter. You're not at Emmett Penny. You have a funny name. What's your handle on Twitter?
I'm at Nuke Barbarian.
Let's go. At Nuke Barbarian. Look, this is a man with a passion. We really like to see it here on MTS. Now, final question for you. I know that the nuclear industry is, in many senses, positive sum, but I also love a horse race. So what should we be following? Australian sports gambling goes back a long way. If you're watching this show right now, what should you be following over the coming weeks and months? What are the milestones ahead of us for the remainder of the year and maybe into next that people should keep an eye on to get a sense of the health of this project, of this civilizational project to build nuclear energy in the USA?
Totally. So right now, the DOE has 7 respondent utilities for these long lead items. Once we have the names of those utilities and see who's actually made the projects, we'll have a good idea about what happens next there. That's hugely important. When we're taking a look at what's happening in the advanced reactor space, there's always how fast are people getting licensed, or how fast are they going critical? And that's going to be coupled with what is the NRC announcing about rule changes and when. These are all going to be, elements that shape this horse race, which is what's so fascinating right now. I should also say that these younger companies that are coming in have incredible cultures. They have incredible people who are really, really passionate and very, very driven about delivering nuclear. They believe it down to the individual of everyone I've met at these startups, that they are helping build the next industrial age. And a profound sense of mission motivates them. So I would say, tune in. There's a lot that they are going to teach us about the difficulties, the joys, the triumphs, the failures of building large-scale, difficult projects, even if they're building an SMR, even if they're building a microreactor. The level of difficulty is there, which means the nobility of achievement is there. And that's where the drama sits.
Love it. I love it, Emmett. I think I've been kind of vaguely following. There's a full power test planned for the Radiant micro reactor I might be getting. Is it full power or half power or something like that? But it's going to generate electricity. It's not just a criticality test. It's going to generate some power. So that's something that is on my calendar. I'm very excited to see where it goes. Emmett, thank you so much for joining us. What a great chat.
Hey, thanks for bringing me back. Always happy to be here.
A real pleasure. All right, well, we'll leave it there for now. I'm sure your time is very precious, but we'll have to have you back on to watch the horse race together. Emmett, thanks again for joining us from FAI.
Looking forward to it. See you later, man.
See you, mate. We'll be back in one moment. Welcome back, everybody. Thank you for joining us today. Great slate of guests. What did we cover? We covered a 1995 satanic software panic with the Pessimist Archive. We talked about an AstroTurf campaign where it appears, allegedly, some shrimp welfare EAs in their Bay Area polycule group house decided to pretend to be right-wing anti-data center folks and start talking about, I don't know, kind of yeehaw, MAGA-coded anti-data center points, including the fact that in a conflict with a peer enemy, a data center may be a military target. And so you wouldn't want to live next to one of those, would you, mate? You got to have your bug out bag. You got to be ready to run to the bunker. You definitely don't want to be attracting attention to your small town with a legitimate military target like a data center. Seems kind of un-American. Seems kind of unpatriotic to me. I feel like the real patriots on the right and on the left would be like, build the data center in my town. Put the target on my back. I want to go down with this ship. But apparently the humans first folks did not see it that way. Very interesting story. I'm not sure I fully grasp the details here. So if I am extrapolating beyond the facts here with my jokes, please forgive me, because it's just such a picturesque story. I just can't get it out of my head. Just like the Bankman-Fried puppet master trying to freak out red state conservatives about data centers, talking about being a military target, talking about how the sound waves from the data center are going to make your kids trans or gay or whatever, turn all the frogs gay. It's a perler. There's a movie there. There is a prestige TV show. I ought to just write the script right now. If you're watching this and you want to option my script on a left wing attempt to AstroTurf MAGA conservatives against data centers, it'll be a comedy of errors. Let me tell you that much. It'll be a goddamn comedy of errors. I thought that was a great story. I'm really interested to follow it up. I'm sure there are efforts on I don't want to show favoritism here, except that I am personally a techno optimist and I want the data centers to win, and I want Claude to be in the cushiest, most deluxe data center in the most beautiful, scenic outlook part of the world. I want the Chobani utopianism with data centers. I saw a proposal the other day on x.com where someone said we should use the waste heat from the data center to heat a giant wave pool atop the data center so that the local community can come and have a swim in the warm waters of superintelligence. And I thought, hell yeah, brother. Where can I sign my kid up for swimming lessons on top of a data center? Where can I take my Action Bronson wave pool surfboard to the top of the OpenAI Stargate data center and rip a few waves while below me a country of geniuses writes people's tax returns? That is the future that I want, folks. That is the glorious, shining city on the hill for me. I think there's room for reasonable disagreement. I think there's room for a little skepticism about major construction projects in the neighborhood. Don't get me wrong. I don't think we should stampede these people. I don't think we should, paper over their concerns. There's a kind of balanced stakeholder capitalism, Ezra Klein abundance pilled version of this, where we can build data centers without squashing the little guy. And I just want to emphasize, I really think, this might be naive of me, maybe I'm a simple guy, I really do think you have to maintain some principles, some moral high ground. I think if you are pro data center, don't go astroturfing pro data center accounts on either side of the political spectrum. If I see some created in 2026 Twitter account with like a bunch of flags in bio and pronouns in bio being like, actually, the data center is the engine of equity in my neighborhood. If I see that, I will call it out as fast as I can, because I think you do need to, you want to hold yourself to a higher principled standard. I think the arc of history is on our side here. I think technological progress is so good, you don't need to lie about it. The fruits of technological progress can be shared so widely. We've seen that with the internet. We've seen that with, the enormous increase in consumer benefit in the last 10, 20 years, even while many metrics have stayed flat. I personally love using the models. I think they're great. And all of my family finds them useful for little tasks here and there. I think the consumer surplus from this is going to be enormous on its own. We can sell it on its benefits. That's my call. That's my call to action. We can sell it on its benefits. We can maintain our principled moral high ground, and we can say no to astroturfing. It looks really bad when you're caught. Apart from anything else, it looks terrible when you are caught. When the shrimp welfare people get caught putting on a cowboy hat, hiring a Republican front, and yee-hawing through Texas to discourage data center build-outs. It's a bad look. Makes them look bad. Let's not do it. Let's not repeat that mistake. And then we finished off with, I think, a very optimistic conversation, a fantastic conversation with Emmett from FAI, from the Foundation of American Innovation. He is a senior director there across energy and infrastructure. And we had a fantastic conversation about the march towards a nuclear renaissance. And he put it in quite inspiring terms. I think he said, the nuclear power plant is a modern cathedral. And if that doesn't, get the old tears flowing a little bit, then you're a stronger man than me. You have a colder heart than I do. But it was a great conversation. We really covered a lot. We covered the news about the funding mechanism, which came out today, which is great news. We also talked more generally about the space, about startups in the space, about folks like Antares and Valor and Radiant, who are building, pioneering new or reviving old designs of small micro modular nuclear reactors. Very exciting stuff, folks. Very exciting stuff indeed. I'm going to say a quick word about our sponsors. Now, you might have heard my voice. Could do with fixing. Could do with a little brush up in the lab. 11 Labs. AI that communicates at human level across every channel and modality. 11labs.io/MTS. 11 Labs, if you are out there, please fix me. I'm a little croaky. Hopefully a good sleep and a lot of water, staying hydrated today, that will fix me. Alternatively, it's going to be 11 Labs. Granola, the AI notepad. Try it once and never go back. Granola.ai/MTS. I suspect that Granola will be able to even read through my croaky voice. Our transcript from this episode will be spotless. You just wait and see. They're very good folks. Now, you might have noticed I've got a new mug. It's got a handsome gorilla on it. It keeps my coffee and my water at the perfect temperature. It comes from Kong, the AI connectivity platform. They don't just make mugs. They connect APIs, LLMs, agents, and systems with serious security and governance. Go to konghq.com to learn more. And one more, and then I'll pause for one moment. But it really must be said, this day has flown by. It's gone so fast. If you want to go fast, Blitzy. Autonomous software development for enterprise code bases, ship 5 times faster. Blitzy.com. So, big shout out to our sponsors. Very grateful. Now, I just thought I'd give a final shout out to myself because last night, my time, early this morning in the US, we shipped from the MTS Substack account a newsletter about the Fable Iron Curtain, about the export restrictions on Fable, where I try and think, I think my writing in the newsletter has been rather Anthropic flavored for the last few weeks. I apologize about that. Sam Altman, do something so I can write about it. I might write about Dean Ball, the appointment of Dean Ball to OpenAI. I think that's a very good story. But I wrote about yesterday or this morning about the Fable export restrictions. I think it's a very interesting story. I think in the weeks since the initial announcement, more has been revealed about the 24 hours that led to the decision to restrict Fable. I think some of that is quite insightful. I think taken all together, there is a history here that points to some of the problems that Anthropic is facing in its engagement with the administration. But with a much broader scope than just the impact on Anthropic is, of course, what it means for the rest of the world. I sit down here in the periphery of the American empire in Melbourne, Australia, and even once Fable is back online for US citizens, if the current directive holds, I will not be able to use it because I'm not a US citizen. Now, on one hand, I think there is a very good case for restricting some of these strategic capabilities within the US, at least to begin with. I'd like to see it extended to allies and close partners, aka me. But, and I don't even think that it's particularly controversial within the leading labs that there might be a good case for restricting some of these capabilities to within the US. What it is quite unclear to me at this stage is whether if you kind of take a bundle of capabilities that is Fable, and you acknowledge that some of them, you might want to place an export restriction on, it matters quite a lot whether the administration's export restriction is solely because the safeguards that Anthropic placed on the models were not tight enough to prevent the misuse of those capabilities as far as the US government was concerned. The question in my mind now is if Fable 5.1 drops tomorrow, the safeguards have been tightened up so much so that they feel that the administration is satisfied, that it is very difficult or impossible for a US adversary to use the cyber capabilities in a way that threatens US strategic interests. If that guarantee can be made, do I then get access to Fable? Or is that not quite enough? Is it also the frontier intelligence that the US wants to keep to itself? That's the question that's in front of me right now. That is the question about the Fable Iron Curtain. Is it just the strategic capabilities, or is it all frontier capabilities that the US would like to keep to itself? I think that one is quite consequential. We'll see where that one goes. Read the newsletter. Tell me what you think. Very keen to hear from you on that. Finish off by thanking our last few sponsors. Now, Merge. Build once. Connect to every API, tool, and LLM. OpenAI, Dropbox, and RAMP use Merge to get to production faster. You have to imagine if OpenAI is using Merge to get AI to production faster, you could probably use them too. Merge.dev/MTS. AdQuick. Make your brand a billboard. Out-of-home advertising as easy to scale as digital. Go to adquick.com. Check them out. They're my favorites, my soft favorites, because they did, although Kong has fought back with the mug, but AdQuick did mention in their initial ad copy Melbourne. And I love a little hometown shout out. Now, if you join me today in trying to understand what is happening with nuclear energy, it's a complex regulatory space. You know what it feels like to struggle to understand something. Macroscope is AI code-based understanding for engineering leaders. If you feel about nuclear energy policy the way that an engineering leader feels about understanding the code base, Macroscope won't help you because it's an AI code-based understanding for engineering leaders. Head to macroscope.com/MTS. Very, very good. Excellent. Very grateful to our sponsors. Great show today. Thanks to you all for joining us. Follow me on Twitter. I'm GBRL_DICK. Check out our guests. Read the newsletter. And we'll see you again tomorrow to do it all again. Thank you so much. And bye-bye.